All right. Hello, everybody. Welcome back to another episode of The Market Close. It is Thursday, November 6th. It is quite an ugly day in the stock market. And quite frankly, we had just a little bit of recovery. Kind of intraday, call it about 2.5 hours ago. And as we get into the close that we're seeing right here, a lot of that recovery is going away. A couple of stocks are holding on to the momentum. Most stocks are not able to hold on to the momentum. After one of the best earnings we've ever seen from Robinhood, that stock is down almost 11% on the day. Ugly day. Ugly day for Hoodie. Palantir down 7%. Tesla down 3.7%. Nvidia down 3.5%. S&P actually not at the lows. Again, you have individual stocks that are getting hit harder than the S&P 500 right here. The lows was 668, got a little recovery up to 673. Now we're at 670.5. Looks like we will get a down 1% day, but might not be as bad as where it was a couple of hours ago at the absolute lows. And we're going to see in the next 12 minutes as we close out the day. AMD down 7%, 238. SoFi 27.44, lost 28.50. Grab is somehow kind of holding green. Google is also kind of holding green. You had some good headlines on Google today in the context of new chips for their TPUs, but everything else, Reddit down 6%, Amazon down 2%, Meta down 2%, Salesforce down 5%, PayPal down 2%, Elf down 35%. I don't think Duolingo has really recovered. Duolingo right here down 26% on the day. You got the VIX, obviously that's up 9%. Volatility is indeed elevated. Small caps are down 1.6%, but everything else is pretty much red. So I think the question on everyone's brain is why? Why are we getting so red? Apple as well holding a bit strong as we get into the close. By the way, we have a lot of earnings today that we're going to talk about. We have Iren, SoundHound, Airbnb, SMR, Draftkings, Opendoor, Affirm, Square, MP, Monster, Peloton, Texas Roadhouse, Take-Two, and a ton of other companies. On top of that, you have the Texas shareholder meeting that should be starting very soon. And then you have a bunch of different macro headlines that we're looking at. We will be watching the Iren call or listening to it, but I'll be tracking all the other earnings in real time. So what is the real reason for why we're so green or so red? We are definitely not green. Well, I think there's a couple things. Number one, well, there's four kind of core things I'm looking at. There's a lot of people saying it's just a technical gap fill, and that's fair. That it can be as simple as that. If you wanted something more substantive, if the Supreme Court ruling on Trump tariffs goes against them, the U.S. would have to refund over $1 trillion worth of revenue and deals. That chatter is starting to become a lot more apparent to the broader market, which could be an issue. Number two is government shutdown is getting ready to shut down entire airports. You've already had 10% of flights get shut down at some of the most important airports in the country, including JFK. That's not the best thing in the world. Jensen kind of, I don't want to say he messed up, but he definitely caused the kerfuffle by saying that China is going to beat the United States in AI. Not the best headline for semiconductor stocks in the United States if they can't sell into China, and China's going to be beating the United States in AI. By the way, China's CCP, Communist Party, yesterday forced tech company. I mean, they've been doing this for a while, but you just had a reestablishment of them forcing tech companies to be buying Chinese state-based chips. So kind of adding fuel to the fire on what Jensen said, that China is going to get ahead if NVIDIA is not allowed to sell. And, you get NVIDIA down about $200-300 billion when you have an announcement like that. And obviously the entire semiconductor market is getting hit as well. And then you had what I think is actually the broader reason for why we're getting some pain, the worst October for layoffs since 2003. The government is closed, but we are seeing some third-party data around layoffs. And it's obviously not pretty right here. Challenger, which is a third-party firm, they came out and said warehousing and technology sectors led last month's surge, but there were 175,000 layoffs in the month of October, the highest since 2003, which obviously is not the best thing in the world. So you got the most amount of layoffs we've seen in over a decade. You've got Jensen not questioning the AI trade, but definitely getting investors to question the United States' role in the AI trade, whether or not that deserves to be questioned. You have the government shutdown, accelerating more pain across the entire ecosystem of people that work inside of the government that don't have an income, and obviously that's going to hurt earnings if they can't actually spend their income because they're not getting any income in the economy. And then you have the Supreme Court ruling on the Trump tariffs that could be going against them, which also is causing some pain. And as a result, you got Robinhood down 11%. BMNR I think is at 36. BMNR 37.46. That's down 10%. Ethereum and Bitcoin really haven't been cooperating today either. Ethereum 3,200, basically 3,300, 3,298, and then Bitcoin right here is at 100.7. Bitcoin didn't go below 100 today, but obviously it does feel like it could lose 100 at any point. So it's an ugly day. It's one of those days where there's not much you can say other than it's ugly, and we have a lot of earnings after the bell. We're going to see how these earnings turn out on a day when things are bad. As you can see, all the companies that have earnings: Opendoor down 7%, SMR down 13%, Affirm down 6%, Square down 3%, Archer down 7%, Monster down 2%, Airbnb down 1%, TTD down 3%, and then Iren down 12%. A lot of these names also in that heavy momentum trade. So the fact that they're getting hit right now makes sense. And, hopefully their earnings can turn things around. But if they don't turn things around, then it's just a kind of crappy day for them to be able to report earnings. On top of that, you had Sam Altman. So Sam Altman had a Bill Ackman post today, and he said a lot of stuff, obviously, because the OpenAI CFO came out and said that they are looking for the government to kind of backstop some of these federal loans. He then had to come out and clarify that that's not what they're actually saying. So it's a very, very long post. I'm honest. Honestly, I didn't read the whole thing, but the part that he did say in the beginning paragraph was, we believe that government should not pick winners or losers, and that taxpayers should not bail out companies that make bad decisions or otherwise lose in the market. What we do think might make sense is governments building their own AI infrastructure, but then the upside of that should flow to the government as well. We can imagine a world where governments decide to take a lot of computing power and get to decide how to use it, and it may make sense to provide lower cost of capital to do so. Building a strategic national reserve of computing power makes a lot of sense, but this should be for the government's benefit, not for the benefit of private companies. I think that's absolute BS. He is obviously, if you read between the lines, making the point that the government should invest or fund, or whatever word you want to use, whatever verb you want to use to make the argument, into compute. What does OpenAI need? A lot of compute. And so, yes, they're not literally saying government give us loans, but they're definitely implying the government should make sure there is a way to ensure that compute is a quote unquote national security target. And as a result of that, companies like OpenAI would be the main beneficiaries. He also said, and I thought this was actually the most interesting thing that he said in his post, we expect to end this year above 20 billion in annualized revenue run rate. Street was expecting around 13 billion, so they are ahead of those estimates, and grow to hundreds of billions by 2030. We are looking at commitments of about 1.4 trillion over the next 8 years. So he's at least giving some level of, hey, I know we said we're going to spend almost $1.5 trillion, but if we're gaining hundreds of billions of dollars of revenue, it's not like we're spending that much of an egregious amount of money, because we're getting the ROI to justify it, which is actually very important and obviously bullish NVIDIA. But nonetheless, this is something that's not necessarily helping the AI trade in the short term, even though long term, that's probably a good thing if OpenAI were to generate hundreds of billions of dollars of revenue. Iren right there down about 11% of the day. Airbnb down about 1.4% as we get into the close. We got 6 minutes until the market closes. S&P 500 down 1% as well. U.S. judge orders Trump administration to fully fund SNAP food and benefits by Friday. All right, so you've got a lot of these federal judges that are not allowing United States citizens to not get the benefits from SNAP. For those that are international, SNAP essentially covers food stamps, which is a program in the United States that allows people that are very low income to be able to get food subsidized by the government. Obviously, the government is shut down. So the question is, how are people going to eat? Well, a U.S. judge has just ordered that the Trump administration has to find a way to fund it, even if the government is shut down. And that is just one, I guess you could call it, reason for why the government shutdown hopefully comes to an end, because Democrats and Republicans come together and they realize, like, if they're going to get, if the federal judge is going to force them in a variety of different circumstances to fund the government, they might as well come together and fund the government. But number two, it means that there's no negotiating chip that either side has, because some of these things are just not going to hold up in a court of law. And, that brings up the question around tariffs, which we're going to get some details on over the coming weeks. But obviously, if that gets reversed, then that's not going to be the best thing for the United States either. Rocket Lab right here down 12% on the day. Again, a lot of momentum names. There's really no safety. I'm not seeing any safety across the board. And the problem with not having any safety is just that when things get hit that bad, they get hit. And they get hit in a pretty ugly way. The other thing that I thought that was also really important that we saw today here is this argument on the 10-year bond. So bond yields started getting a little bit more momentum. And the reason bond yields started getting some more momentum, now they're starting to go a little bit more down on the day, as you can see right here, below 4%. One of the number one reasons is because people are freaking out that if we're not going to get this rate cut, then there might be something that we have to do in terms of navigating the private credit market. Or if we are going to get the rate cut, then we need a better yield on bonds. So we're going to sell off bonds if we don't have the capacity to be able to say that the 4% the government's giving us is good enough, because if we're cutting rates anyway, then we might as well lock in a different type of yield. As you can see right here, 68.9% on this December rate cut probability. It really doesn't make a lot of sense to me that it's anywhere below 85% given the layoff report that we saw this morning. Worst layoff since 2003, but nonetheless, that one is at 70%. Matt's in the chat. Had to tell my boss I'm not actually resigning. That I'm sorry I told him to make love to himself. Yeah. Anyone who told their boss to go F themselves. Well, that's you might want to send an email that says, well, I was a little drunk, I didn't mean to actually say that. That's not what I really intended to say. And hopefully the bosses welcome everyone back with open arms. All right, so we got 3 minutes until the market closes. Let's do a poll right here in the chat and see what people think on what pumps or dumps. We have a lot of stocks. This poll, which one outperforms? Today we have Iren. Let's do NP. Let's do Archer. And let me know which of these names you guys own. And then what's the other one? Let's do Opendoor. Let's put Opendoor in there. Got a lot of different names from a lot of different sectors. Legends being a little weird, guys. The charts, as I'm looking at them, are not loading up. So I'm going to go back to using Webull in the morning. We had some issues with Legend as well. So we're just going to use Webull right here, I think, as a lot of people are checking their portfolios using the product today. You're seeing a little bit of weakness on the servers there. By the way, Robinhood did talk about the AWS issues that they had. Someone asked a question about it. I don't fully remember the response, but Vlad did respond to it immediately and talk about some of the issues and what they're working on to make sure that that doesn't happen again. All right, so let's build our watch list right here. I know we got a lot of people that are Iren bulls. We got SoundHound. We have tons and tons of different companies that we are going to get reporting today. The Tesla shareholder meeting will be happening at the same time as well. And yeah, as Benny says, it's a tough day to report, dude. It's just a tough day to report. I mean, the fact that Robinhood put up those numbers and it's down 12% on the day, it just means momentum's getting flushed out. And sometimes that happens, but this is the reality of the markets, and it's definitely an ugly Thursday in November, but nonetheless, that's how it's happening. See a lot of people saying SoundHound. See a lot of people say they bought the dip on BM&R. See a ton of elves in the chat. A lot of Irens, TTD. That one's down 3%. That one took a hit over the past month. SMR, Affirm. A lot of those companies are reporting today as well. Draftkings, they signed a big deal with ESPN. So we're going to get there. Draftkings is actually a little green. One of the only names that's green. We're going to see a bunch of those stocks as they report today. All right, folks, here we go. Thank you, everybody, for being here. We got a lot of different headlines that we'll be trying to cover as we get into the close, including this Tesla shareholder meeting, along with earnings, crypto, and macro. And we will keep going from there. Thank you, everybody, for being here. It is Thursday, November 6th, 4 p.m. The stock market is now closed. All right, here we go. Here we go. What a day. Tesla ends down 3.5%. American Airlines down 2%. Opendoor down 9%. PayPal down 2%. Snapchat was up 22%. It ended up 9%. At least it was green. S&P 500 was down 1% on the day. Disney was down 0.5%. Arc Innovation was down 4%. Meta was down 2.6%. Coinbase down 7%, lost 300. AMD down 7%. Netflix down about 0.5%. Square was down 3.6%. Roku was down 1%. Then DraftKings actually up on the day. Palantir ended down 6.84%. Robinhood ended down 10.81%. GrabbyGrab ended 0.18% down, so it was down about 1 cent. Oklo down 11% on the day. Eli Lilly was up about 1% because of that deal with Novo Nordisk that Trump had in the Oval Office. Marvell was up a little bit on the day. Figma was actually up 4%. They had a great earnings. And then Google ended up green on the day. The Qs were down about 1.86%. NASDAQ took a nasty beating, much worse than the S&P 500 as it's leveraged to technology. NVIDIA, did we get a 185 or at least close? We got a 188 close. So NVIDIA down 3.65%, down about $7 on the day, but NVIDIA closing above 185. All right, earnings. Let's get into it. These are the companies that we've got. We'll see what after our move. Trade Desk up 10%. Trade Desk is up 10%. You got to move on TTD. It's giving you a little bit of something. Again, Trade Desk has been hit really hard, fell from 120 to 40, then got from 40 to 80, then came all the way back to 40. Now it's at 51 after hours. So this one's just been a stock that had a lot of pain, especially in the advertising space. me see if I can get those numbers, and then we'll get into the other companies that we have. Trade Desk, wow, beat by 2% on EPS, beat by 3% on revenue. 45 cents versus 44 cents expected on EPS. Revenue 739 versus 719. EPS is up 10% year over year. Revenue is up 18% year over year. You do have a 9% move right there on the Trade Desk, as that is green. Iren is up 2. We got a little bit of juice right there on Iren. Iren up 3%. Don't have the numbers yet on Iren. Oh, no, we do. Iren. Okay, revenue, it looks like they beat by 5%. 240 versus 228. I don't have an EPS number. I don't have EPS. Did EPS come in flat? I'm not seeing any move on EPS. I'll try to get that in a second. TTD is fading now. There's that red candle right there after hours. It was up 10. Now it's up 4. Peloton also has earnings today. They also had a recall of 800,000 bikes because of a technical issue. So you have that headline today. Opendoor is down 1.3% after hours. Iren now fading. I don't see an EPS target on Iren. Let me see if I can get it in a second. But don't have the yet. Square, don't have their numbers. That's up 1.4%. Peloton's up 3.4%. Texas Roadhouse flat. Airbnb is flat. Archer's up 1%. SMR's up 2%. And Affirm is flat. Airbnb is now moving. Airbnb, you got 5% move. A little bit on Airbnb. Let's see if we can get any of these other numbers. SoundHound don't have numbers yet. We do have Sunrun, if anyone cares about that. 6 cents versus 14 cents EPS, missed by 57%. 724 versus 601, they beat by 21%. Revenue's up 35% year over year. EPS is up 116%. This is a solar panel company, right? Sunrun up 3% after hours, either energy or solar panels. One of the two, I think it's in that niche. I've heard of this company a while ago, but that one did miss on EPS. They beat on revenue. SoundHound, I don't have their numbers yet, but that's down 2%. Airbnb just got it. Airbnb missed by 4% on EPS. 221 versus 231 expected. Revenue was a slight beat at 4.09 versus 4.08. Revenue is up 10% year over year. EPS is up 4% year over year. Airbnb is up 2.8. Correct, they're solar. Okay, so they are solar. They missed on EPS by 57%. Airbnb missed by 4% on EPS. That stock, it's up 2%. Nothing too crazy on Airbnb. Iren is running a little bit. Okay, Iren is running 5%. Let me see if I can get some more accurate numbers on Iren. Yeah, this is weird, dude. No one has the source for EPS. How is EPS not out, but revenue's out? How does that make any sense? Revenue is 240 versus 228. Let me go to their website. Where the hell is the earnings per share? I don't see it yet. We are getting a move after hours. 71. That's up 6%. Iren website. Yeah, Iren website's down too. It's not loading for me. 504 gateway. Okay, dude, this Iren cult, bro. You guys are spamming that website trying to get these numbers. Well, that one's not showing it right now. So we'll see if we can get anything. We are getting, I mean, an 8% move is not bad. 8% move is, and I know it's back to levels where it was a couple days ago, but still nice. That's the only stock that's moving green after hours. Airbnb, a little bit of green. Everything else. SoundHound nuked, 9% down on SoundHound. Oh, Accelera also has earnings today as well. Accelera down 5% after hours. It was down 3%, now down 7%. It was down 3% in the day, down 7% right here. I'll see if I can get their numbers in a second. Accelera right there, down about 7%. USAR is getting wrecked. Don't have their numbers yet, but USAR, wow, down 9%. All right, that doesn't look the best for MP. That's also going to put up numbers. MP's only down 0.5%, but USAR in that rare earth space is getting hit. Iren, the only stock that's really seeing any green after hours. I still don't have their their EPS. I still don't have that yet. Amprius Technologies, I do not have their earnings either. That stock was down 13% on the day. If I get those numbers, I'll see after hours. AMPX is up 5%. So you got a bit of a move right there, but don't have their numbers yet. SoundHound down 10%. Do I have SoundHound? Okay, SoundHound, wow, missed by 200% on EPS. They lost 27 cents versus 9 cents expected. Revenue was 42 versus 40. They beat revenue by 4%. Revenue's up 68% year over year. EPS is down 350% year over year. Why are these guys losing that much money? I don't know. But that is definitely an ugly miss for SoundHound. That's getting it. Look, if you're not profitable and if there's a lot of momentum driving your stock and not a lot of earnings, I mean, on a day like today, it's not the prettiest. But I am confused. Dude. Why are they missing EPS by 300%? That is like that there's an issue. Feels either structurally or maybe there's a tax accounting thing, but missing, like in a world in which most companies are beating EPS by double digits, missing by triple digits is a bit weird. MP's down 1.2. Trade Desk now goes red. Trade Desk now goes red. Expedia bookings grew by 12%, driven by a 26% increase in B2B, B2C. Gross bookings grew by 7%. Expedia stock after hours is up 9%. Weird day. You got some travel stocks going up, a lot of other consumer stocks going down. But you got Expedia at least getting that move after hours, showing the travel sector might not be in the worst situation. Opendoor is down. Oh boy, that is a dump. That is a dumpy dump. That's down 12%. Let's see if it can recover. If that candle has to stick, I'll see if I can get the numbers. Opendoor, don't have them yet. I do have MP Materials. They beat by 38% on EPS, negative 10 cents versus negative 16 cents expected. Revenue 53.5 versus 53. Revenue's down 15% year over year. EPS is up 17% year over year. So MP does have a double beat. USAR looks like it was a bit worse, but MP not getting hit as bad. Opendoor down 14%. My goodness, dude. What did these guys say? What did these guys say for it to be that bad? Let's see if we can get the numbers. That's not pretty. Not pretty. 71% miss on EPS. Negative 12 cents expected. Negative 12 cents versus negative 7 cents expected. 915 versus 882. They did beat on revenue. It's not a bad beat by almost 40 million on revenue. Beat by 4%. Revenue is down 34% year over year. My goodness. Revenue's down 34% year over year. EPS is down 9%. Okay, so this is obviously not a growth stock because they're not really growing anything yet. There's probably some other metrics they are growing that might not be kind of top line, bottom line numbers that Wall Street looks at. 71% miss is a bit aggressive. Now, I believe they are gross profitable. They're not GAAP profit, or no, sorry, they're profitable on an adjusted EBITDA basis, not on a GAAP basis, which, you know, companies over time, as they can scale their models, can get to that GAAP profitability, but that is a bit more than the street expected. It was down 14, now it's down 8. You have a ton of people coming in and buying the dip on Opendoor. It bottomed at 552 so far, it looks like, getting a little bit of recovery, but that's down 7%. Peloton's up 6%. Iren, we still don't have the EPS. The website's not loading. SoundHound's down 8. MP's down 2. Opendoor still down 6. Affirm's up a little bit. SMR is up, and then Airbnb is up 5.6. Oh my goodness. GTA 6 delays release until November 19th, 2026. Take-Two's down 8%. Someone asked me in the morning, what do you think of Take-Two? And I think the literal response I gave was, it all depends on GTA. And I don't know enough about video games or the timing of that video game in particular to understand if the stock is worth buying, because I don't know if it's going to be delayed. I don't know how successful the game is going to be. But I do know that game is everything for Take-Two. Wow, dude. They delayed it by 6 months. Goodness gracious. November 2026. All right. It's going to take some time. Square, that's down 4%. Square's down 4% right here. I'll see if I can get those numbers as well. Again, Expedia, one of the names that's doing well after hours. Take-Two getting hit pretty bad as a result. I don't have Draftkings yet as a result of this GTA stuff. Square, wow. They missed by 21% on EPS, 54 cents versus 68 cents expected. And then 6.1 versus 6.3 billion. Dude. I mean, a lot of tech companies last week were not missing by double digits. Almost every company today is either missing or they're missing badly. Why is Square missing EPS by 21%? Why is revenue up 2% year over year? Why is EPS up 2%? Like this is supposed to be one of the most important fintechs, at least in America. Cash App is the #1 app on the App Store. Goodness gracious. EPS up 2%, revenue up 2%, missed on the top and bottom. Square right there, down 1.72%. Airbnb is up 4, SMR is up 1, and then Affirm, another fintech. I'll get their numbers in a second. This one's at least getting a little bit of a move higher. That's up 4%. That is up 4%. MP is now dumping. MP down 2%, not as bad as USAR, but it's still dumping. Opendoor tried to recover. Now it's going back down. 550. If it violates 550, you might see some pain, but that is down 9% right here. It was down 9% during the day, so that's an 18% drawdown on Opendoor. Draftkings don't have those numbers yet. Let's see if we can get this. Affirm, wow, beat by 109% on EPS. 23 cents versus 11 cents expected. 933 versus 883 million on revenue, beat by 50 million on revenue by 6%. Revenue's up 34% year over year. EPS is up 174% year over year. Stock's not moving like crazy, but that looks like a very strong top line, bottom line beat on EPS. Okay, Iren's up 3%. Do we have the number yet for EPS? Do we have the number on their earnings per share? Yes, $1.08. $1.08 versus 9 cents expected. That's 1,000% beat on EPS, if that's accurate. Is that what you guys have? That's what I have. That's what I'm looking at. Iren, 1,000% beat. Now, again, that dollar rate, is that because of Bitcoin, FASB stuff? Is that because of something accounting? Or is that actually because the data center business had margins that allowed them to beat by that level? If they did, then that's a hell of a beat. That's a hell of a beat. If it's some accounting thing, then it is what it is. Again, the stock is still up 6x this year. So it's not really losing too much momentum, but that's up 2.8% after hours. 2.8% after hours. I'm going to try to go on their website whenever it comes back and see how did they get that beat, because I think that's what the street cares about right now. The website is not loading at the moment. But that's what you got on Iren. Affirm, again, double beat. Square, double miss. Opendoor missed by 71% on EPS, beat by 4% on revenue. Dropbox beat by 14%, 74 cents versus 65 cents expected on EPS, 634 versus 623 million on revenue. So you do have Dropbox getting a beat on the top and the bottom. That stock is up 5.4% after hours as well. Do you guys want Tesla? Do we switch to Tesla? I mean, those are pretty much all the earnings. We got Iren's call in, I think, an hour. We can go to Tesla if that's what people want. Yes, yes. Let me get some yeses in the chat if that's what we want. I think that's pretty much all the earnings. I don't think there's anything else too crazy. Well, hold on. The meeting's not even starting yet. The meeting's not even starting yet, guys. We can't even go to it yet. It's live. The stream is live, but it's not starting. Okay, so when it does start, we'll go to Tesla. But that's not live yet. Monster had earnings as well. Monster Energy. Monster is flat after hours. Don't have their numbers, but it is flat. Vlad is live. He's probably live on TBPN. Okay, let me see if I can get some of these other numbers, and we'll go to Vlad, and we'll see what he is saying. Let me pull this up real quick, and then I'll try to get a couple other of these companies that are putting out earnings. We'll switch to Elon once the shareholder meeting is live.
Now, basically every single company comes and asks us about their retail strategy because they've seen what happens in the public markets to companies that engage retail effectively. And so allocations have been generally going up. Retail's more engaged. CEOs are talking about how, they're giving bigger and bigger allocations. You guys probably saw Bullish, which was after Figma. Bullish CEO came out, gave retail a huge allocation, 20% of his deal. 10% of that went to Robinhood.
Wow.
And
okay, Tesla starting.
My name is Brandon Earhart. I'm the General Counsel and Corporate Secretary. And
the audio sucks on their side, guys. It's not that good for me, so I don't think it's that good for you. I'll see if I can get a better stream, but this is on the main Tesla website. The audio is not really the best.
Similar to last year, this meeting will have two parts. We'll go through the 14 ballot items, and the second part, Elon Musk. Today, we will discuss business outlook and may make other forward-looking statements. Such statements or predictions are based on current expectations. Actual events or results may differ materially due to a number of risks and
It's bad on everyone's stream. I don't know why. I mean, if you guys are okay with it, that's fine. I can hear it, but I just can't hear it loud enough. So I'll see if I can find another stream, but this is the Tesla official website.
Would like to welcome members of the Tesla team here, members of PricewaterhouseCoopers, and members of our board. Before we get started, why don't we hear from Robin, our board chair.
Well, good afternoon, everyone. It's wonderful to welcome you all to the 2025 annual shareholder meeting. I apologize for my voice. I've been speaking to investors for the last couple of weeks, non-stop, I think. So we here at Tesla could not continue to do the impossible without you, our shareholders. Our ongoing engagement with you all makes what we do possible. And I'm thrilled at how many of you made your voices heard this year as we aspire to create more value than any other company in history. Yes. Without your support,
Draftkings down 11%.
the heights that we've already demonstrated over our relatively short yet storied history. As we further expand our ambition in our quest to build a world of sustainable abundance, we are excited to continue this partnership. Tesla is at an inflection point. I think I've said that 3,000 times over the last few weeks. And this last year has been a critical one in our history. I want to take some time to review the acknowledgement and achievements by the Tesla team, of which I and my fellow directors are incredibly proud of. We continue to redefine the automotive industry across production, customer experience, and ownership. Model Y was once again the best-selling vehicle worldwide of any vehicle in 2024. And with the new Model Y released earlier this year, it's now better than ever. Our energy business continues to reach new heights, and we deployed 31 gigawatt hours in 2024, more than double what we achieved in 2023. Fabulous. I love the energy business. And we are actively investing in both of these businesses as we aim to maximize their installed base of production globally. The installed base serves as the platform for our future value, and that creation over time, Tesla will achieve through services such as robotaxi and virtual power plants, powered by our real-world AI. In 2024, through the use of our products, Tesla consumers avoided releasing nearly 32 million metric tons of greenhouse gas emissions. And this is a 70% increase year over year. Our ability to avoid emissions will only accelerate from here as we displace larger volumes of fossil fuel-based alternatives and increase the utilization of our products through AI. But emission avoidance is not only the thing that we focus on here at Tesla. Improving safety has been paramount to our mission since day one. Our vehicles consistently achieve the highest safety standards when tested across the world. And that safety is increasingly enhanced with autopilot technology. In 2024, our global fleet of vehicles experienced one crash after driving more than 6.8 million miles. That's amazing, 6.8 million miles. And to put that in context, that is 10 times better or safer than the average driver in the US, 10 times better. And in 2024, and is nearly double the safety performance of our autopilot technology in 2018. With many enhancements we expect to make from here, we believe our autonomy technology will improve this performance by orders of magnitude. Sustainability extends beyond the impact of product use. The Tesla team continues to focus meticulously, evaluating each step on the product journey, from raw material extraction to intermediate processing, manufacturing, delivery, product use, and the end of life, looking all the way through to making sure that we reduce our resource impact and the resource use, and bringing that to life across the entire sustainable and closed-loop economy. For more details on what we do each and every day, I encourage you all to read the impact report. It is an amazing document, and it continues to improve over time in terms of what the team is doing. And we are also laser focused on ensuring the resulting prosperity of our efforts can be shared by all. This applies to our employees, our customers, and even those who have yet to enjoy one of our products or engage with our company in any meaningful way. Tesla spends countless hours ensuring that we procure the most responsibly sourced and produced inputs. We maximize the safety of our operations, and that all Tesla employees can benefit from the appreciation of our equity through our incentive programs, and that we continue to bring down the cost of our fabulous products across the range, increasing that accessibility for all. At the end of the day, we here at Tesla are working tirelessly to make the world a better place for all through innovation and grit. To our amazing employees, thank you for all of your hard work in achieving our mission. You are the beating heart of Tesla, and we cannot continue to deliver without you. To the management team who never get a shout out, thank you for your huge efforts. To our shareholders, all of you in the room and on the webcast globally, once again, thank you for your support. Please know that we are listening to you and are here to represent your interests. You are the owners of the company, and your voices, your perspectives, and your input are critical to what we do here at Tesla each and every day. My fellow directors and I serve you as your fiduciaries and oversee Tesla's mission, purpose, and strategy, and these responsibilities are in our minds every day. I would also like to take this opportunity to thank my fellow directors for their diligence, their dedication, and their tireless efforts. Changing the world for the better is always accompanied by difficulties. And what I can say is that you can't do it by checking the boxes and just reviewing PowerPoint presentations. Thank you for rolling up your sleeves, each and every one of our directors, the hard work that you do, lending your unique talents and delivering to our shareholders. Thank you. Thank you. Our accomplishments have been hard-earned, and these last several years have not been without their challenges. We still have much to accomplish, and I believe that we have the right team, the right technologies, the right physical infrastructure to create a world that we've only just begun to imagine. The future is bright. Thank you. Now I'm going to hand it back to Brandon. Thank you very much. Thank you.
Thank you, Robin. I will now call the meeting to order. It is 3:25 p.m., and I declare that the polls are now open. We have already received over the past few weeks voting proxies from our shareholders. However, if you wish to vote your shares now, you may do so on the online portal or with the ballot boxes you received at the front. Tesla has appointed Tony Carridio, a member of the Carridio Group, to serve as our Inspector of Elections. In addition, Broadridge Financial Solutions has certified that starting on September 17th, 2025, the proxy materials or notice of internet availability of the materials were sent out or mailed to shareholders of record as of September 15th, 2025. We have a majority of the outstanding shares represented at the meeting, so I declare that a quorum is present. We now will proceed with the meeting. The items of the agenda are as follows. There are 6 Tesla proposals. The election of our 3 Class 3 directors, Ira, Joe, and Kathleen, to serve a term of 3 years until their successors are duly qualified. Number 2, to approve say-on-pay on a non-binding advisory basis. 3, to ratify the appointment of PricewaterhouseCoopers LLP as our independent registered public accounting firm for fiscal year 2025. 4, to adopt amendments to our organizational documents to eliminate certain supermajority voting requirements. 5, to amend and restate the 2019 Equity Incentive Plan. And number 6, the 2025 CEO Performance Plan to Elon Musk. The Tesla board has recommended that all shareholders vote for each of the director nominees and for the Tesla proposals except for the one on supermajority voting where no recommendation has been made. We also have 8 shareholder proposals that are described in our proxy statement. I'd like to remind the shareholders that Tesla's board has prepared a statement of opposition on each of them except for the one regarding XAI. Those statements are in our proxy. Now let's go through the shareholder proposals. The first one is an advisory vote regarding board authorization of investment in XAI. Our board has not made a recommendation on this. The shareholder proposal is proposed by Mr. Stephen Hawk, who I believe is here to present the proposal. Mr. Hawk?
Thank you so much. Good afternoon, ladies and gentlemen. Fellow shareholders, Elon, and esteemed board members, thank you for this historic opportunity. I am Stephen Hawk, shareholder since 2012. It's truly my honor to present shareholder proposal number 7. The proposal is simple. I urge the board to exercise its discretion and authorize a strategic investment in XAI in some meaningful way, sooner rather than later. This isn't just capital, it's about formalizing Tesla's role as a leader in autonomous intelligence, turning AI into our new book, not just a new chapter. Tesla has always been an AI company, revolutionizing transportation, energy, and robotics through FSD and Optimus. But as we approach the singularity during this tsunami of AI, outsourcing our brain to external providers risks misaligned goals, data vulnerabilities, and lost innovation. XAI, founded by Elon, is different. It is maximally truth-seeking, curiosity-driven, and aligned with humanity's best interests, like Tesla's mission for sustainable abundance. XAI was seeded with Tesla talent, enabling bidirectional flow for highest caliber staff attraction and retention. Integrating Grok models within our vast real-world data would further supercharge FSD for safer vehicles, empower Optimus to navigate complex worlds, and to optimize energy grids. Think vertical integration of Tesla as a neural link of AI platforms, controlling the coming Optimus army with prudent stewardship. Financially, it's a no-brainer. XAI's explosive growth could yield massive returns, strengthening our balance sheet amid EV pressures, with Elon's stewardship the best for shepherding AI safely. Conflicts are minimal. Board oversight ensures fairness. XAI needs Tesla more than vice versa. But together we foster human happiness, consciousness, and meaning beyond work, shifting purpose from labor to truth-seeking in a world of abundance. Shareholders, we can't be spectators. Tesla must actively participate. Let's not outsource our destiny, but rather own it and maintain power, control, and safety. I call on the board to formalize this investment relationship and on you to support it. Thank you to Elon, and special thanks to Tesla boomer mama, Alexandra Mertz.
Thank you, Mr. Hawk. The second shareholder proposal is an advisory vote regarding adopting targets and reporting on certain sustainability metrics with our senior executive compensation plans. Our board has recommended that our shareholders vote against this proposal, as explained in our proxy. The shareholder proposal is proposed by Tulip Share Capital, LLC, whose representative, Mr. Akrouge, has prepared a pre-recorded message.
Fellow shareholders, I am Antoine Argouge, CEO of the impact fund Tulip Share, speaking in support of Proposal 8. Our proposal asks Tesla's board to take a simple but meaningful step, link a portion of the executive compensation to measurable sustainability performance. Tesla's success has always been built on bold, measurable goals, production target, market cap milestone, and innovation. But as we enter a new era of scrutiny around climate, labor, and governance issues, it's time that part of those milestones also reflect how sustainable that success is achieved. Proposal 8 is not asking to replace all the financial goals. We're asking to strengthen them. Imagine if one or two tranches of the future compensation were tied to tangible outcomes such as reduction in carbon intensity per vehicle, verified improvement in worker safety, or supply chain transparency. These are metrics that protect long-term shareholder value, reduce legal and reputational risk, and ensure Tesla's leadership is rewarded not only for scale, but for sustainable impact. Tesla's mission is to accelerate the world's transition, linking compensation to sustainability metrics, ensure that this mission lives at the very core of the leadership decision-making. This is how Tesla can continue to lead, not just in innovation, but also in responsibility. We urge shareholders to vote for this proposal and support a compensation framework that drives both performance and purpose. Thank you.
Thank you, Mr. Akrouge. As a reminder, the board's response is set forth in the proxy. Our third shareholder proposal is an advisory vote regarding an audit of certain labor practices. The board has recommended against that, as set forth in our proxy. The shareholder proposal is proposed by the National Center for Public Policy Research, whose representative, Stefan Padfield, has prepared a pre-recorded message.
My name is Stefan Padfield, and I am the Executive Director of the Free Enterprise Project. The Free Enterprise Project is part of the National Center for Public Policy Research, which is the proponent of Proposal 9, requesting that Tesla conduct and report on a child labor audit. Let me begin by emphasizing that we are strong supporters of free enterprise, innovation, and shareholder value. We recognize Tesla's extraordinary contributions to the electric vehicle market. Our proposal is not anti-Tesla. It is pro-transparency and pro-shareholder. Proposal 9 asks for something very simple and reasonable, a verified accounting of whether and to what extent child labor is implicated in Tesla's supply chain. Tesla's opposition statement relies on policies, but policies are not the same as proof. A quote-unquote zero-tolerance policy is commendable, but without independent verification, it is only a promise, not evidence. The U.S. Department of Labor continues to list cobalt mining in the Democratic Republic of Congo among the sectors with the worst forms of child labor. A 2023 white paper on the financial and material impacts of child labor, authored by Hayes, identifies Tesla as a case study in the ongoing risks that cobalt and other mineral sourcing pose to automakers. And while Tesla's own 2024 impact report notes that the company invested more human and legal resources than ever before to combat forced and child labor, it provides no metrics showing whether those investments are working. Shareholders deserve data, not just assurances. We are asking Tesla to back its admirable words with verifiable results through a third-party audit or a transparent report. This is not just a moral question, it's a governance and risk management issue. Reputational, legal, and operational risks can directly affect shareholder value. So too can the risk that enthusiasm for electric vehicles undermines proper accounting of the often hidden cost that child labor may be embedded deep in EV supply chains. If Tesla is truly the industry leader it claims to be, it should also lead in transparency. We all know that proxy vote counts can be distorted by a plethora of conflicts of interest. Accordingly, we urge Tesla's board to see this proposal not as an attack, but as an opportunity to properly account for the costs and benefits of Tesla's mission, regardless of the final vote. If you have not done so already, please vote for Proposal 9. Thank you.
Thank you, Mr. Padfield. As a reminder, the board's response is set forth in the proxy. Our fourth shareholder proposal is a vote to amend the bylaws to repeal a derivative suit ownership threshold. Our board has recommended against, as set forth in the proxy. The shareholder proposal is proposed by the Comptroller of the State of New York as the lead filer, whose representative, Thomas D. Napoli, has proposed a pre-recorded message.
This is Thomas DiNapoli, New York State Controller. As trustee of the New York State Common Retirement Fund, owner of more than 3.3 million shares, we urge shareholders of Tesla to vote for Proposal 10 to amend the bylaws to repeal the 3% derivative suit ownership threshold. We filed a proposal, along with New York City Controller Brad Lander, to restore one of the most fundamental investor rights, the right of shareholders to hold directors and officers legally accountable when they breach their fiduciary duties. When Tesla asked investors last year to approve its move from Delaware to Texas, the board assured us that shareholder protections were similar in both states. Yet within months, Tesla's board engaged in a bait-and-switch scheme and immediately turned its back on its investors by amending its bylaws to reduce shareholder rights as soon as Texas offered an opportunity to do so. The new bylaw allowed Tesla to block nearly every investor from bringing a derivative suit unless they hold 3% of the company's stock, currently about $30 billion in Tesla shares. That threshold leaves only Elon Musk and a handful of giant Wall Street funds with any legal standing to act on their own. It effectively makes the board immune from accountability. Tesla claims this rule is meant to discourage frivolous lawsuits, but courts already have tools to dismiss meritless cases. This bylaw doesn't stop abuse, it stops proper oversight. And it tells shareholders that the board no longer wants to be answerable to them. Our proposal simply seeks to repeal that bylaw and restore accountability. It ensures that if directors violate their duties, all investors still have a path to protect the company's long-term value. Unfortunately, this attack on shareholder rights is part of a larger pattern at Tesla. We see a board that lacks true independence. The board has allowed our CEO to divide his attention among multiple outside ventures and then offered a pay proposal that could hand him a $1 trillion windfall and even more unchecked power. These are not isolated issues. They all stem from the same problem, a board that refuses to act as an independent check on management. Tesla has changed the world through innovation, but no company, no matter how visionary, can thrive without accountability. Strong governance protects investors and strengthens companies over time. I urge all shareholders to send a clear message that accountability, independence, and respect for shareholders are essential to Tesla's future success. Thank you for your time and consideration.
Yeah, thank you, Mr. DiNapoli. The board's response is set forth in the proxy. The fifth shareholder proposal is a vote to amend Article 10 of the bylaws. The board has recommended that our shareholders vote against it, as set forth in our proxy. This shareholder proposal is proposed by the Treasurer of the State of Illinois and trustee of the Bright Directions College and Savings Trust as the lead filer, whose representative, Michael Ferrix, has prepared a pre-recorded message.
Fellow Tesla shareholders and members of the board, my name is Michael Ferrix. I serve as Treasurer for the State of Illinois and as trustee of the Illinois College Savings Programs. I'm here to present Proposal 11, which asks Tesla to adopt a simple investor protection. If the board chooses to impose more restrictive requirements for submitting shareholder proposals, as newly permitted under Texas law, those changes must be ratified by a supermajority of shareholders. At its core, this proposal is about protecting shareholder rights. If the board decides to limit our ability to submit proposals, this amendment ensures that shareholders have the final say. It helps to ensure that Tesla remains aligned with the will of its investors, plain and simple. Now, why is this important? Tesla is navigating a period of volatility. Leadership transitions, intense competition, and heightened scrutiny from regulators and customers. In times like these, strong governance and active shareholder input can be critical. They serve as competitive advantages that position Tesla to lead, not just react. This proposal seeks to implement a reasonable safeguard that would reinforce accountability and build trust. The board itself has emphasized the importance of investor feedback. In the proxy statement, Chair Robin Denholm and Director Kathleen Wilson-Thompson wrote, "We are in Texas because it provides a more predictable governance framework that allows us to hear from you, the people who know Tesla best." If the board actively seeks to hear from shareholders, it's hard to reconcile that position with their opposition to this proposal. To reiterate what's at stake, Texas law now allows shareholder submission thresholds higher than SEC standards, requiring shareholders or groups to hold 3% of voting shares or $1 million in stock to submit a proposal. Compare that to current SEC rules, which allow a shareholder to have holdings as low as $2,000 to $25,000, depending on how long the shareholder has held the stock. If the board chooses to adopt the Texas thresholds, they risk silencing investors who could drive meaningful governance improvements, as well as narrowing the pipeline of ideas. Note that this proposal does not limit the board's direction to evaluate governance options. It simply ensures that if the board adopts the Texas shareholder submission thresholds, a supermajority of shareholders must ratify that decision. That's fair. It's reasonable and fully aligned with the board's stated commitment to its investors. Again, I encourage my fellow investors to vote for Proposal 11 as a clear step towards protecting our rights as shareholders. Thank you.
Thank you, Mr. Ferricks. As a reminder, the board's response is set forth in the proxy. The sixth shareholder proposal is an advisory vote to elect each director annually. Our board has recommended against, as set forth the reasons in the proxy. This shareholder proposal is proposed by James McRitchie, who has prepared a pre-recorded message.
Thank you, shareholders. We've presented this proposal before, 2021 and 2024. It won a majority both times, even with board opposition. But Tesla requires a supermajority of shares outstanding, so those majorities weren't enough. Today we ask again, join the 90% of S&P 500 companies that elect all directors annually. Declassification means accountability every year, not every 3 years. Most institutional investors support this reform. It's the retail votes we need here today. A Delaware court recently found 3 major governance failures at Tesla. The board wasn't independent, the disclosures to shareholders on its pay plan were misleading, and the board failed to negotiate properly on our behalf. Declassifying the board is part of the cure. It ensures shareholders can hold directors accountable each year or nominate qualified replacements when needed. Matt Moscardi of Free Float Media calls this one of the most important votes of the year because it could shift Tesla's board from a friends and family plan to independent professionals with the skills necessary for Tesla's next chapter. We're also endorsed by Nell Minow, co-founder of Value Edge Advisors, and ISS, one of the most respected proxy advisors. John Chevedden's related proposal, number 13, calls for simple majority voting. We'll need that reform too for this proposal to succeed. Tesla's Musk premium, once a source of strength, is fading, along with his global reputation. Remember, Tesla is his only publicly traded company. It's the liquid piggy bank that fuels his other ventures. Yes, Elon Musk is brilliant, but no company should depend on a single personality. Either he stays long enough to keep using your capital elsewhere, or he moves on when the tap runs dry. Either way, shareholders must prepare for Tesla's future, a democratic, professional company led by a capable, independent board. Let's build Tesla to attract customers, employees, and investors who all contribute to its innovations. Vote for proposal number 4, declassify the board. Vote for proposal number 13, eliminate supermajority requirements. Together, let's restore accountability, independence, and trust at Tesla. Vote now before the polls close. Your vote can make a real difference in Tesla's future and your future as well. Thank you.
Thank you, Mr. McRitchie. As a reminder, the board's response was contained in the proxy. Our 7th shareholder proposal is an advisory vote regarding a proposal that won 54% at last year's meeting. Our board has recommended against for the reasons set forth in the proxy. This shareholder proposal is proposed by John Chevedden, who is on the line to present this proposal. Mr. Chevedden.
Hello, this is John Chevedden. Proposal 13. This proposal is about Tesla being governed by a Democratic majority vote standard. This Proposal 13 is proud to be on the same topic as the Tesla Proposal 6. Shareholders request that Tesla take the steps necessary so that each voting requirement in the Tesla charter and bylaws that calls for a greater than simple majority vote be replaced by a Democratic requirement for a majority of the votes cast for and against such proposals, or a simple majority vote standard. It is important to vote for both Proposal 13 and Proposal 6, which are on the very same topic. In fact, it's more important to vote for Proposal 6 because Proposal 6 is a binding proposal, and this Proposal 13 is an advisory proposal. It is important to vote for Proposal 13 because Proposal 13 is a backup proposal in case the Tesla Proposal 6 does not get enough votes. This Proposal 13 has one advantage over Proposal 6 in that it requires less votes to be approved by shareholders than the Tesla Proposal 6, since this Proposal 13 is an advisory proposal.
Bro, what is going on? This proposal is a backup in case Proposal 6 doesn't get approved because this proposal needs less votes. What's actually going on here?
Annual election of each Tesla director will tend to keep Tesla directors away from their current status as being lapdog enablers for Mr. Musk and Mr. Musk's outrageous executive pay and Mr. Musk's outrageous distractions from Tesla. Please vote yes for Tesla being governed by a Democratic majority vote standard, Proposal 13, and vote for the Tesla Proposal 6 on the same topic.
Thank you, Mr. Chevedden. As a reminder, the board's response is set forth in the proxy. Our 8th and final shareholder proposal is an advisory vote to seek shareholder approval before adopting certain bylaw amendments pursuant to Texas law. The board has opposed it for the reasons set forth in the proxy. This shareholder proposal is proposed by Eric and Emily Johnson and Bruce Bryce Matherin as co-filers, whose representative Bruce Abear from Newground Social Investment has prepared a pre-recorded message.
Good afternoon. I'm Bruce Herbert of Newground Social Investment in Seattle, and I stand to move proposal number 14, a simple request that Tesla hold a vote before adopting any bylaw that would restrict the ability to file a shareholder proposal. Here's why this matters. Texas recently passed a law that allows companies to set sky-high barriers to shareholder participation. Instead of the SEC's current one-year ownership threshold of $25,000, these Texas rules would require owning $1 million of stock, or 3% of the company, in Tesla's case roughly $30 billion, before one could file a proposal. And Tesla could enact this without a shareholder vote, simply by issuing a notice. This is not shareholder democracy. It's silencing shareholders, like nearly every one of us in this room, whether you are an individual, retiree, or institution. The backers of such thresholds presume you must must be ultra rich in order to have a good idea, which on its face is a baseless and undemocratic proposition. The shareholder proposal process serves both Tesla and the capital markets. This is because stockholders frequently spot emerging risks long before they hit the headlines, whether in the form of labor relations, climate impacts, or failures in governance. Shareholders provide an efficient, early warning system that helps companies to stay ahead of the curve. We are a low-cost, high-value cornerstone that keeps companies and capital markets healthy. In closing, corporate democracy is not a nuisance. It's an important safeguard. It's how shareholders ensure accountability and informed long-term value creation. The idea here is quite simple. Before limiting shareholder rights, put it to a shareholder vote. Therefore, to keep Tesla engaged, accountable, and forward-looking, please vote for proposal number 14. Thank you.
Thank you, Mr. Hebert. As a reminder, the board's response is set forth in the proxy. Please note now is your final opportunity to submit any votes for them to be counted. I declare that the polls are now closed. Based on the proxies that we have received and the votes submitted at the meeting, I'd like to announce these results on a preliminary basis. With respect to the shareholder proposals, items 8 through 14, our shareholders have supported the recommendations on the Tesla board on all of them, other than proposal 12. With respect to proposal 7 regarding XAI, while we have received more votes in favor than we did in against, there were a significant number of abstentions. Since this is an advisory vote, the board will examine the next steps in light of this level of shareholder support. Now, moving on to the Tesla proposals. First, on the proposal to adopt amendments to our organizational documents to eliminate certain supermajority voting requirements, our shareholders have not approved. Second, on the Say on Pay advisory vote, our shareholders have approved. Third, on the ratification of the appointment of PricewaterhouseCoopers as our Tesla's independent registered public accounting firm for the 2025 fiscal year, shareholders have approved. Fourth, on the election of our 3 Class 3 directors, Ira, Joe, and Kathleen, our shareholders have re-elected them. Fifth, on the amended and restated 2019 Equity Incentive Plan, our shareholders have approved.
Elon gets paid. There you go.
Sixth and finally, on the 2025 CEO Performance Award to our founder and CEO, Elon Musk, with over 75% voting in favor, approved.
Elon will make $1 trillion if he takes it to $8.5 trillion. It is officially approved with 75% of the vote.
I declare this meeting is now closed. Elon Musk.
Welcome. So, what we're going to. Those bots are just dancing. There are no wires. Those are actual robots. Thanks, guys. First of all, I'd like to just give a heartfelt thanks to everyone who supported the shareholder votes. I super appreciate it. Thank you, everyone. I'd like to thank the Tesla board for their immense support. We have a fantastic board, fantastic group of shareholders. Thank you all. And what we're about to embark upon is not merely a new chapter of the future of Tesla, but a whole new book. And I'm going to talk about that. So this really is going to be quite the story. And Optimus is a fundamental part of that. The sheer scale of Optimus, I mean, I'm going to say a bunch of things that probably I shouldn't say, you know, but but that's what keeps it interesting. I mean, have you watched any other annual shareholder meeting? I mean, honestly, I was like, I mean, if you need to go to sleep, sure. I mean, other shareholder meetings are like snooze fests. I mean, but ours are bangers. I mean, look at this. This is sick. Yeah, we got like the cyberpunk nightclub here with real robots just standing there and milling around and dancing. And around our engineering headquarters in Palo Alto, the robots are just walking around the office 24/7 with no one minding them. And then they go charge themselves. And yeah, so the scale of Optimus, like I said, that's really going to be something else. I think it's going to be the biggest product of all time by far. Yeah. So, like bigger than cell phones, bigger than anything. I guess the way to think about it is that every human on Earth is going to want to have their own personal R2-D2 C-3PO.
Okay, guys, I'm interrupting one last time to say we're going to stick on Elon. If anyone wants Iren, I'm putting Sam's YouTube in the chat. Sam is streaming it. The majority of you guys want Elon. If you really want Iren, we'll go to Iren after Elon. But if you want it immediately, go to Sam's link. He's streaming it. And you can listen to Iren on Sam's channel.
Everyone's going to want one. I think in terms of industry, providing products and services, I think it's probably, I don't know, 3 to 5 robots in industry for every, one that's a personal robot. I think there could be tens of billions of Optimus robots out there. Now, obviously, it's very important we pay close attention to safety here, because we do want the Star Wars movie, not the Jim Cameron movie. I love Jim Cameron's movies, but you know what I mean. So, So we're gonna launch on the fastest production ramp of any product, of any large complex manufactured product ever. And starting with building a 1 million unit production line in Fremont. That's line 1. And then a 10 million unit per year production line here on the I don't know where we're going to put the 100 million unit production line. Maybe on Mars, I don't know. But I think it's going to literally get to 100 million a year, maybe even 1 billion a year. People often talk about like eliminating poverty, giving everyone amazing medical care. Well, there's actually only one way to do that, and that's with the Optimus robot. With humanoid robots, you can actually give everyone amazing medical care. In terms of Optimus will be more precise. Optimus will ultimately be better than the best human surgeon, with a level of precision that isn't possible, that is beyond human. So I think that's a pretty wild concept to say, okay, if people always talked about eliminating poverty, but actually Optimus will actually eliminate poverty. Optimus will actually give people incredible medical care. So, so you start getting like sort of some pretty wild sci-fi sort of scenarios where, and some of these things I say will obviously be taken out of context and used in snippets and sent around, but whatever. I'm still going to say them. I think we may be able to give people a more, if somebody's committed crime, a more humane form of containment of future crime, which is if you say like you now get a free Optimus and it's just going to follow you around and stop you from doing crime. But other than that, you get to do anything. It's just going to stop you from committing crime. That's really it. You don't have to put people in like prisons and stuff. I think it's pretty wild to think of the various of all the possibilities, but I think it's clearly the future. My book recommendation for maybe the best, mostly utopian sci-fi future are the Ian Banks books, the culture books. So if you're curious, like what do I think the future is probably like? I think it's probably a bit like that, Asimov to some degree, but I think it's and Heinlein, Ian Banks. If you're like saying what does Elon think the future probably will be like for AI and robots, it's kind of Banksian. Now, and things do get kind of wild from an economic standpoint, because at a certain point, with AI and robotics, you can actually increase the global economy by a factor of 10 or maybe 100. There's not like an obvious limit. Like Optimus is kind of like an infinite money glitch. And maybe there won't even be money in the future, or money might be measured in terms of wattage, like how much power can you bring to bear from an electrical standpoint. I guess what I'm saying is hang on to your Tesla stock. Yeah. So, yeah, man, it's pretty wild. You're welcome. Let's see, I think we've got some slides to go through. I'm going to say ad-lib a lot of this stuff, but... So, when we started Tesla, the goal was to accelerate the advent of sustainable energy, and that's what we've done. I think Tesla has really led the way with electric vehicles, with battery packs, with a lot of solar, and many other companies have then followed our lead and done that. And electric cars, which used to be non-existent, are now prevalent. And the Model Y, for example, is the #1 selling car of any kind on Earth. obviously now with AI and robotics, we need to update our mission. And our mission, I think it's good. It's a great mission, which is to achieve sustainable abundance. Which is, it's like, because I often ask people like, what is the future that you want? What's the best future you can imagine? Because we want to try to make that future, like make the best future you can imagine. And I guess probably the best future is if people, can have whatever they want from a goods and services standpoint or medical standpoint, but at the same time we don't destroy nature, and we keep the rainforests and the beautiful national parks and all that stuff. And so that's what I mean by sustainable abundance. Is that people, can have whatever they want, have all their needs met, but we still keep all of the natural beauty that we want. Okay. I mean, if somebody can think of a better future, I'm all ears. But I think that's probably the best way to go. So yeah. Let's see. So. Yeah, as you know, every Tesla is designed to be autonomous. So it's sometimes difficult to explain to people if they've not. In fact, I'm sure you've all encountered this, where you try to tell people that the Tesla can drive itself, and they think you're crazy or something. I mean, especially like apart from the Cybertruck, our cars look pretty normal. I mean, they're good-looking cars, but they don't look super. They look normal. But I guess it's kind of like having a cat, or like, and the cat's just sitting. Let's say you've got a cat and it's like just sitting there on the couch, and you try to tell people that the cat can actually, it's actually Puss in Boots, and it can actually put on boots and a hat and swashbuckle and sing and dance, and people are like, no way, man, that's a cat. Until the cat does all those things. And you're like, damn, what the? We've got, millions of Tesla cars out there that are kind of like Puss in Boots. They're intelligent, but people don't know that they're intelligent. They look like normal cars, but actually they're super smart and can drive themselves. So I think that's probably the single biggest thing we need to do is to educate potential customers that you can either have a cat that's like a normal cat, or you can have Puss in Boots, and Puss in Boots is very cool. These days when people come to our stores, or even people that have the car haven't turned it on, we find, and sometimes people have paid for FSD and haven't turned it on. We're like, what? You should at least try it once. And so now the sales team. The service team will actually sit with customers and say, look, let us show you how it works and how easy it is. And then once they've tried it for even just a few days, they can't live without it. And now with version 14, we're actually getting to the point where we almost feel comfortable allowing people to text and drive, which is kind of the killer app. Because that's really what people want to do. And do. Actually, right now the versions, the car's a little strict about keeping your eyes on the road, but I'm confident that in the next month or two, we're going to look closely at the safety statistics, but we will allow you to. Text and drive, essentially. Yeah.
That would be a big deal.
So, yeah. It's certainly been the current situation, which often people will actually turn off FSD to text, then turn it back on, which is less safe. So yeah, that's probably the single biggest thing is just get people aware of FSD. And then obviously we need to get it approved in Europe. So we certainly appreciate the support of our customers in Europe pushing the regulators to approve FSD, because you can't even get even just normal supervised FSD is not allowed in Europe currently, which doesn't make any sense. And I've had these like crazy conversations with the regulators that seem like a Franz Kafka novel, where I'm like, well, look, we have billions of kilometers of data that shows that FSD increases safety. And they're like, well, we have to have all these committee meetings. I'm like, yeah, but people's lives are at stake here. So definitely a pressure from our customers in Europe to push the regulators to approve would be appreciated. And then we have partial approval in China, and we hopefully we'll have full approval in China around February or March or so. That's what they've told us. Yeah, but yeah, the fact that every Tesla car is capable of full self-driving, every car we build and have built for the last several years is capable of full self-driving is pretty wild, and most people don't know that. So, and then we've got the first car that is specifically built for unsupervised full self-driving to be a robotaxi. It's called a cybercab. It doesn't even have pedals or steering wheel. Yeah. So there's no side view mirrors. There's no yeah. So it's very much optimized for the lowest cost per mile in an autonomous mode. And that production is happening right here in this factory, and we'll be starting production in April next year. So the way that Cybercab is designed is it's designed obviously for a purely autonomous world, but also the manufacturing system is unlike any other car. The manufacturing system of the Cybercab, it's closer to a high volume consumer electronics device than it is a car manufacturing line. So the net result is that I think we should be able to achieve, I think, ultimately less than a 10-second cycle time, basically a unit every 10 seconds. Maybe ultimately take a few years to get there, but it's theoretically possible to get to a 5-second production time. And so what that would mean is you could get on a line that would normally produce, say, 500,000 cars a year at a 1-minute cycle time, like Model Y, this would be maybe as much as 2 or 3 million. Maybe ultimately, it's theoretically possible to achieve a 5 million unit production line if you can get to the 5-second cycle time. So. A lot of cars. So these will be everywhere in the future. So, and we wanted to look futuristic, so it changes the look of the roads. So now the ingredients, when you look at what Optimus what's required to make Optimus and the various ingredients, what do you need to do to do high volume humanoid robot production? I think it's worth considering that really the cars we make are already robots, but they're four-wheeled robots. So Tesla is already the biggest robot manufacturer in the world because every car we make is a robot. And when you break it down to the fundamental elements, you've got batteries, power electronics, motors, gearboxes. You've got connectivity. You've got a vision-based AI. Hi, Optimus. All the various pieces that you need for a humanoid robot. You need the AI chip, you need the AI software, you need to be able to manage a large fleet. And so really Optimus is a robot with arms and legs as opposed to a robot with wheels. So Tesla's ideally suited, I think, to succeed in this arena. You will see certainly many companies showing demonstration robots. There's really three things that are super difficult about robots. One is the engineering of the forearm and hand, because the human hand is an incredible thing, actually. It's super dexterous. So engineering the hand really well, the real-world AI, and then volume manufacturing. Those are generally the things that are missing. One or more of those things are missing from other companies. So Tesla is the only one that has all three of those. Yeah. So, yeah. So this is the Optimus kind of initial. It's kind of the prototype production line. The high volume production line will be very automated, obviously, but this is really the production line that we use to make the prototypes. So you can get a sort of rough sense for what it takes to build the robot. Got to pull the finger. And then, as I've said before, I think once we reach about 1 million units per year of sustained production or in excess of that, I think probably the cost of production is around $20,000 in current year dollars. So this will be certainly very affordable. Yeah, like I said, I think Optimus will ultimately increase the size of the economy probably by a factor of 10 or more. Next year we start production with Optimus version 3. What you're seeing here is Optimus version 2.5. Optimus 3 is an incredibly good design. The Tesla engineering team is amazing. When you see Optimus 3, yeah. It will seem as though that there's someone like a person in a robot outfit, which is how we started with Optimus. It really is going to be something special. And then Optimus 4, that hopefully starts production in 27, and then Optimus 5 in 28. So it's kind of like an annual release cycle with significant improvements with each one and gigantic increases in the scale of production. So, yeah, sustainable abundance via AI and robotics. That's the future we're headed for. And as I think most people here know, the safety statistics show that miles driven on FSD are much safer than miles driven without it. So what this will translate to ultimately is saving the lives of millions of people and preventing hundreds of millions of accidents. So a massive increase in lives solved and tragedies avoided. It's going to be amazing.
Opendoor just did a direct offering.
And how many people here have tried 14.1? Okay. All right, cool. Yeah, you can see even with the point releases, it's getting quite a bit better. It should be pretty smooth at this point. But really 14.2 is, there are major changes with 14.2 and then 14.3. I think by 14.3 is when we'll really be at the point where you can just pretty much fall asleep and wake up at your destination. So. And then I've been putting a lot of time into the new Tesla chip design because in order to have a functional robot, you have to have a great AI chip. And it needs to be an inexpensive chip, and it needs to be very power efficient. So we believe the AI5 chip will be probably about a third of the power of, say, something like a Blackwell, an NVIDIA Blackwell, which is a great chip, for roughly comparable performance, and much less than 10% of the cost. So. This is a chip that is very much optimized for the Tesla AI software stack. So it's not meant to be a general purpose chip. It's meant to be an amazing chip for the Tesla AI software. I mean, a couple things that I think like, how is Tesla able to achieve such an improvement? I think it is because we are specialized. We're not trying to, NVIDIA has to serve the superset of all past and future customers. So all of their requirements, all of the software that they've written has to work, which is a very difficult problem. Whereas we just need to make it work for our software. And so we were able to simplify the chip dramatically. And then we also, I think we're unique in this, but like we have an integer-based system. And integer operations are fundamentally more efficient than floating point operations. So we can do floating point, but the vast majority of our inference is done in integer, which is, if you're familiar with sort of logic gates, like the simplicity of integer, and integer is much more power efficient, much more silicon efficient, but you actually have to train for integer inference, which everyone else is training for floating point. That's kind of like a niche technical detail, but it's actually very important. So yeah, this is going to be a great chip. So this chip will be made in basically in 4 places: TSMC Taiwan, Samsung Korea, TSMC Arizona, and TSMC Texas. And we already know what improvements to make for AI6. So I'm hopeful that we can, within less than a year of AI5 starting production, we can actually transition in the same fab to AI6 and double all of the performance metrics. So. I'm super hardcore on chips right now, as you may be able to tell. I have chips on the brain. I dream about chips, literally. I can draw at least the broad brushstroke physical design of the AI5 chip by heart at this point. It's a good chip. It's a good chip, sir. So this is really key. Now, one of the things I'm trying to figure out is how do we make enough chips? I have a lot of respect for the Tesla partners, TSMC and Samsung. Maybe we'll do something with Intel. We haven't signed any deal, but it's probably worth having discussions with Intel. But even when we extrapolate the best case scenario for chip production from our suppliers, it's still not enough. So I think we may have to do a Tesla terafab. So it's like Giga, but way bigger. I can't see any other way to get to the volume of chips that we're looking for. So I think we're probably going to have to build a gigantic chip fab. Yeah. Got to be done. So anyway, some of the stuff I've already talked about. Yep, we've done a tremendous amount for sustainable energy, and that's only going to grow over time. The world is moving towards a solar battery economy, which is ultimately that's where it was going to go anyway. But what Tesla's done is accelerate that outcome. Sometimes people don't understand quite how much energy comes from the sun. So the sun is 99.8% of all mass in the solar system, Jupiter being 0.1%, and then 0.1% is miscellaneous, Earth being in the miscellaneous category. So the total amount of energy, sometimes people say, like, well, we'll build fusion reactors on Earth. It's like, well, actually, the giant fusion reactor in the sky is basically impossible to beat. To such a degree that even if you could burn Jupiter in a thermonuclear reactor, the amount of energy produced by the sun would still round up to 100%. That's how much energy the sun produces. So solar power is necessarily the future. And I think there's going to be a lot of solar-powered AI satellites. And I think Tesla's going to play a role in that. We've obviously refreshed the product line, so S3XY. If people haven't tried the Model S, 3X or Y, or the Cybertruck, I recommend at least getting a test drive or a test ride, as the case may be. Try out the full self-driving, and I think you'll be blown away. To those who do not, if you might be listening and don't have a Tesla, you should try one. And of course, we've got the Cybertruck, which is the toughest truck of all time. It's literally bulletproof, faster than a Porsche 911, and can out-tow a Ford F-350. So it's a great car, great truck. And then starting next year, we manufacture the Tesla Semi. So this is already, we already have a lot of prototype Tesla Semis in operation. PepsiCo and other companies have been using the Tesla Semi for quite some time. But we will start volume production at our Northern Nevada factory in 2026. So we got two big products, or three massive products starting production next year. We've got Optimus, we've got Tesla Semi, and we've got the Cybercab. So, and then battery packs. So if you look at total US power generation capability, it's roughly a terawatt. But the average power usage is less than half a terawatt. And that's because there are big differences in power usage between day and night. So the daily and seasonal variations in power consumption mean that the United States, and really every country, is only producing about half as much electrical energy as it could. Because without batteries, there's no effective way to buffer the energy. So what batteries actually enable is, even if you don't build any incremental power plants, you could double the energy output of the United States just with batteries. This is a super big deal. And in fact, I think that's really where most of the incremental energy production in the United States is going to come from, is literally batteries. So a bigger deal than it may seem. And then we keep improving the battery design, so the Mega Block, which makes it really easy to deploy battery, utility scale batteries. So we've just simplified and brought more of the components to be internal to the batteries, so you can just show up and drop off a battery and it works. And then hopefully over time we will actually add more and more of the power electronics so that Megapack will actually be able to output up to 35 kilovolts directly. So you won't need a substation, is what I'm saying. You can just literally drop it off, kind of like the way that a power wall, you just connect it to the house, the utility wires go on one side and the other side goes to the house mains, and that's it. So we want to get Megapack to the point where you just literally take the utility wires and you plug them in, and it just works. So. Then we've also built the world's largest supercharger network. So we do a lot of things here at Tesla. That's the biggest supercharger network in the world by far. And ultimately, you'll be able to go anywhere on Earth using a Tesla supercharger. And it's pretty close to anywhere on Earth, but it's it's going to be ultimately just anywhere. It'll just work anywhere. So the supercharger team has done great work expanding that and improving the efficiency of the supercharger network. And in North America, they did such a good job that the other car companies basically said, well, they'll just use the Tesla supercharger network. I'm like, okay, sounds good to us. It's always important to have a slide on safety in the factory, so we continue to improve safety for our factory workers. We care a lot about their well-being. Like one way you can just tell if a company is a good company or not, if you just walk through the factory or walk through the office and catch the vibe. And the vibe in the Tesla factory is good. People are happy. That's how you know it's a good company. We've also put a lot of investment into raw materials. So we've built in South Texas and Corpus Christi the biggest lithium refinery outside of China, I believe. So it's starting off with 50 gigawatt hours of lithium, and we'll expand from there. So this is a very, very important to have, in a worst case scenario, that we have the ingredients necessary to make a battery. Very important. And then we've got here on this site the cathode factory, which is just the sort of giant building about a half mile that way. And we're just making sure that we, from a supply chain standpoint, are resilient against any potential geopolitical challenges. And then also at this factory, we also make the 4680 cell, which is getting better and better. And that 4680 cell will be used in the Cybercab. It is being used in the Cybertruck and will be used in the Cybercab and also in Optimus. So that's going well. But we continue, obviously, to get cells from many suppliers. It's kind of like the chip fab thing. We'll take as many chips as our suppliers can provide us, but then beyond that, if they can't provide us with any incremental cells or chips, we kind of have to make them ourselves or we get stuck. That's the Tesla Semi factory. So it's going to be pretty cool to see these going down the road in scale. Yeah, so that's the basic plan. Sustainable abundance for all. All right, so yeah, I guess we can go into Q&A now.
I didn't know they were doing Q&A, but we got Q&A.
Maybe at the next annual shareholder meeting, we'll have Optimus take some of the questions. That'd be cool. So let's see, Alexander. Well, thank you for your help, by the way. Yeah. Yeah, please go ahead.
Thank you. Is that a mic? Is it? No, let me hold it. It's okay. Well, what a year's been, right? I mean, just a year ago, President Trump got elected on the same day. These 12 months have been a heck of 12 months. Thank you to the board, because I think they had to weather quite some storms
yes.
of institutional investors. And obviously, thank you to you. And we stand with you. I think we showed it, and we will show it everywhere.
Thank you.
So we would like to express a wish, please. This is a nice venue. We love coming to the factory, and I think it's actually great we're doing this at the factory. But there are thousands of retail investors who are crying because they cannot. They come to me. I love playing the mama, but I now give it to you. Please organize a bigger venue. We're bigger than Berkshire, and we will do better than Berkshire.
Okay, sure.
And we can pay to make it happen.
Yeah. Actually, Tesla will be way, way, way bigger than Berkshire long term. It's going to be kind of nutty. All right, we'll do the next one. Maybe we'll do it in the, maybe the downtown arena or the soccer stadium or something like that.
And get your security check. We want to make sure that you're safe.
What if I just bob and weave?
But, you know, we want a party, and if you can bring the other Elon companies there as well, investors would really appreciate it.
All right, sounds good.
So thank you very much for listening to that.
All right.
Elon, as a father, I just want to first thank you for everything you're doing in the world, especially freedom of speech. Thank you. And one question. Will you or Tesla ever consider FSD tied to an owner's account rather than a vehicle to encourage more frequent upgrades, provided the transfer is to only a brand new Tesla vehicle while fostering brand loyalty? If the vehicle is sold or traded without upgrade to another Tesla, FSD ownership would end.
Well, we have done that a few times. I guess we could extend it again. All right, we'll extend it. We'll extend it for at least another quarter, and then play it by ear after that. All right.
Howdy, Elon. Congrats on not having to show up to work for free anymore.
Yeah.
We now have over a $40 billion war chest. We're cash flow positive and remain that. We know how you feel about fiat already. Is it time to take a look at Bitcoin? What's your belief on that? Also, you've hinted towards that there's a wheelchair accessible model in the works. Were you referring to the Robovin? And if so, can we please speed up production to help the least fortunate?
Sure. Obviously we need a vehicle that's big enough to fit a wheelchair, if it's wheelchair accessible. So I think that is the Robovin or Robus or whatever we call it. I mean, it's not like we're slowing down because we want to slow down. It's like we're spinning like a zillion plates here. But I do think it would be very cool because I think aesthetically as well, it just would change the look of the roads and make it feel like the future. So it won't be long before we make that. But since we do have Optimus, we've got Cybercab, Optimus, and Semi all next year. We'll probably have to be maybe the year that a couple years from now or something like that. But we certainly will make a wheelchair accessible vehicle. So.
Hi, Satoshi. I was privileged enough to attend the Investor Day, and you also talked about the factory being a product. And I saw the dry cathode method and so forth, and I wanted to know the progress in that, and also would Optimus be working on that in the future production line in the future?
Yeah, I guess the dry cathode, man, that's turned out to be a lot harder than we thought. It does look like it's going to be successful, and it will have some cost advantage relative to wet cathode. But if I had to wind the clock back, I would probably have gone with wet cathode instead of dry cathode, because it just turned out to be a lot harder to make it, capable of high volume production with super high reliability. But we will be scaling up battery cell production at Tesla, and looking for cell production from our suppliers as well, because we're going to be ramping up production very dramatically at Tesla. So now that we believe we have full self-driving, that we have autonomy solved, or at least are within a few months of having it unsupervised autonomy solved at a reliability level significantly better than human. That means it's time to ramp up production, because the value proposition is now much greater than a regular car. The killer app really is for people: can you text and drive, or can you sleep and drive? Can the car take you to your destination, or do you need to pay attention and have to drive it? And before we allow the car to be driven without paying attention, we need to make sure it's very safe. But like I said, we're on the cusp of that. I know I've said that a few times, but we really are at this point, and you can feel it for yourselves with the 14.1 release. What we're going to push to expand vehicle production as fast as we possibly can. So aspirationally, we'd aim to increase vehicle production by about 50% by the end of next year. So it's very hard to increase production, but that's roughly, I don't know, maybe we get to, like, I'm just guessing, at an exit rate by the end of next year of around 2.6, 2.7 million vehicles annualized production, and then aim to get to maybe 4 million by the annualized rate by the end of 27, and then maybe 5 million by the end of 28. Those are our aspirational goals. So this is a gigantic increase in output, which means that the entire supply chain has to move in unison with that increase in volume. The nature of producing a large complex product is that it moves as fast as the least lucky, dumbest element in the entire system, and there's 10,000 plus items. But this, like I said, this really is it's not just a new chapter for Tesla, it's a new book. And that new book is massively increasing vehicle production, and ramping up Optimus production faster than anything's ever been ramped up before in history. So.
Awesome. Elon, thank you. Thank you from all of us. The retail shareholder is really, really care. And so I echo the sentiment of, a larger venue where more can come. As a testament to that, I was fortunate enough to be here last year. And since then, touring the factory, talking to, people that work here, I'm just a retail shareholder, but increased my holdings 12 times, right? So I know it's really engaging and gives people a confidence, and so thank you for having us, and I do echo that. I hope it grows. Last year, I'm the one that asked you about your well-being and safety.
Oh yeah, I'm still alive.
And there's a broad, general question, and it was before, some of the uncertainty that's unfolded since then, and
yeah.
So I hope it had a positive, impact, and we all care. And so my question this year, you've talked recently about the most mind-blowing product demo of all time, and a shot at being the most memorable product unveil ever.
Roadster. Yeah.
And I have patiently been waiting on my Founders Series Roadster reservation. So on behalf of the Founders Series guys that have stuck in there, can we be invited to this unveil?
Oh yeah, sure, absolutely, definitely.
Okay.
Yes.
So all Founders Series can be invited?
Yes. I mean, it's the least we could do, frankly, for people that are long-suffering Roadster reservation holders. I feel confident in saying it will be the most exciting product unveil ever. And I hope that whether it goes well or doesn't go well.
Since I'm up here, can I get the first one?
Well, I guess it's according to whoever put down their deposit in that sequence. So that's but you'll get a very early one. I mean, the new Roadster is very much sort of like it's not even the icing on the cake; it's the cherry on the icing on the cake. So I mean, it's really kind of like it's like it's not essential for sustainable abundance. Let me put it that way. But I do think there should be very cool technology in the world that is that's way beyond anything that's ever existed, and I think I'd like those, like, even if I could never have access to those things, I'd like to know that they exist and see the future happening. So I think it will be inspiring to a lot of people, and just it's extreme. It's like the coolest car, if it even is a car, that will probably ever exist. Yeah. So.
Hi, Elon. Congrats on the proposal plan. That was amazing, the compensation. Question back to chips. So chips.
Chips will be the limiting factor.
To the future. So on
that. Chips and electricity are the two limiting factors.
Yeah, and we got the energy and power and energy packs ready to roll. So I think on the chips, I think you said TSMC, Samsung, perhaps Intel, 14A, and several different sites. I heard a couple U.S. factory sources, which is.
I mean, we're like everyone.
Everybody.
It's like.
Yeah.
Yeah.
And so I guess is there an open door in the future of investing directly into some of those foundries? And second question, how big is a Terafactory? Can you put that in scale and
yeah, that's a good point.
That's a semiconductor Terafactory?
Yeah, well, the thing is that we actually have agreed to buy all the chips that are made from the fab, so it's basically a money printing machine for TSMC and Samsung. It's like literally, the faster you make the chips, the faster we send them money, but it's still not going at just fast enough. So that's why I think, as far as I can see, the only option is to go build some very big chip fab. And then you got to solve memory and packaging too. So, but otherwise, you just tap out at whatever the chip production rate is. So I guess Terra would be, you'd want to say it's got to be at least 100,000 wafer starts per month size fab. And maybe that would be one of 10 in a complex. So it would ultimately be 1 million wafer starts per month. Yeah, exactly. You can tell when it gets the giggle factor, that's probably a good sign that we're onto something special. But I wouldn't be surprised if long term it's like 1 million wafers a month. Yeah.
Hi, Elon. I'm a long-term investor, so I've been holding the shares for 12 years. I worked at the autopilot team development for 10 years, and I brought my dad here from Brazil. We actually won the Tesla Vision contest with the Cybertruck B video, so I hope you get to see that at some point. So thanks for the free Model Y. And my question is about, obviously, market expansion, but not only South America, Brazil, but also into Mars, like with the upcoming rendezvous of Mars and Earth. What's going to be in the payload, you know? What are we going to send there?
Well, Optimus is going to play a big role. Well, Optimus and I think Tesla vehicles will play a big role on the Moon and Mars. So for a Moon base and a Mars city, Tesla vehicles and Optimus robots are natural fit for building and operating a Moon base and a Mars city. So, sorry?
Cybertruck also?
Yeah, it's Cybertruck. You will need to drive around in a pressurized vehicle if there's a person inside. But yeah, it'll be something cool. Next level Moon buggy or Mars buggy. So, all right.
Hi, Mr. Musk. Gaurav. Been a fan of yours since 2006. I think I saw a piece in Popular Science magazine. It was really cool, and I think I was 15 at the time. Shareholder since 10 years now. It's been really, really rewarding. It's changed my life. So thank you very much to you and Tesla. My question is regarding Tesla's mission for a sustainable future as it pertains to autonomy. I personally fully expect a deflationary period after, unlocked by autonomy, basically, both in moving humans and goods and whatnot, excluding Optimus even.
Yeah.
What efforts is Tesla going to focus on to reduce the dollar per mile? Rough math, I think like 30 cents a mile would be really nice. 50 cents is pretty good too. I mean, looking at inflation later on. And then I guess the second part of that, how low does it have to be for people to just stop buying cars, like where it doesn't make economic sense to do that? I expect that to affect economies of scale and then further increase the pricing of vehicles there on out. So what is that node at which inflection happens?
Well, in terms of cost per mile, I mean, we do see a path with a lot of work to get below 20 cents a mile in current year dollars. I somewhat agree that things will probably be deflationary as productivity increases, because you can think of money supply as being the ratio of goods and services to what's the growth in goods and services versus the growth in the money supply? That ratio is basically inflation. And so if the output of goods and services grows faster than the money supply, then you necessarily have deflation, or vice versa. They try to make it sound complicated, but it's not. So I'm not sure that even government overspending can actually. I think government overspending will be lower than the increase in productivity of goods and services, which would imply deflation as you expect. Sorry?
What about economies of scale and the impact it has to how you respond as an automotive company when people stop potentially buying cars?
Economies of scale?
In like auto manufacturing, for instance, it only makes sense if lots of people buy your vehicles.
The total number of vehicles will decrease. The sort of vehicle fleet out there is about 2 billion cars. Right? 2 billion. If you add up all cars and trucks that are not at a scrapyard, I think it's around 2 billion. But that number would decrease with autonomous vehicles. so the total fleet size would drop. I actually think miles driven will increase because it is now much less painful to travel somewhere. So if somebody's thinking about traveling across a busy city, then they'll take into account, well, how much pain do I have to deal with? If I have to go through 2 hours of traffic, I probably won't do it. But if you're just, say, sitting in a cybercab watching a movie or doing some work, then it's just like sitting in a little lounge. So I think you'll see probably a significant increase in total miles driven, but at the same time, a decrease in the total active fleet of vehicles.
I'd just like to reiterate how grateful we all are to have you on board, ready to lead us to another $7 trillion in market cap, at least.
At least.
Obviously.
Thank you.
My question is, how much of a concern is it that when Cybercab starts production in Q2 next year, that regulation won't be there yet to where you can deploy Cybercabs being produced? Or are you guys confident that every Cybercab you guys make, you'll be able to deploy?
Yeah, I think the rate at which we receive regulatory approval will roughly match the rate of Cybercab production. It'll be maybe a little tight, but it's about right. And I'd like to thank Waymo for paving the path here. It's very helpful. Yeah, but I think we'll be able to deploy all the Cybercabs that we produce. And the other thing is, like, once it becomes like extremely normal in cities, it's just going to become like the regulators will have just fewer and fewer reasons to say no. And then you've got this, you've got the accident statistics at scale, and you can show that autonomous miles save lives. And you've got unequivocal, billions of miles to prove it. Then I think it's hard for regulators to say no. Yeah, true. All right.
First of all, Elon, thank you so much for everything you do for the Tesla shareholders.
Thank you.
Do you see a path for Optimus to have consciousness downloaded to it?
You mean human consciousness, or?
Yes.
Yeah, I mean, it's not like immediate, but if you said down the road, would you be able to, say, with the neural link, have a snapshot of, or at least an approximate snapshot of somebody's mind, and then upload that approximate snapshot to an Optimus body? I think that at some point that technology becomes possible, and it's probably less than 20 years. Yeah. But of course, you won't quite be the same, be a little different, because you'll be in a robot body, and the mental snapshot will not be precise. It'll be probably pretty close, but not exactly the same. On the other hand, are you the same person that you were 5 years ago? Nope. I mean, a lot of things have changed. Yeah, but I guess at some point, if you want to be uploaded to a robot body, my guess is that becomes possible. Yeah.
Hi, Elon. Space-based data center is a great idea, and I agree with that.
Yeah.
I was curious on your views on space-based solar power, the idea of beaming down microwave energy down to Earth so that you can just point it to where it needs to go without transmission, without distribution lines, and it's more energy dense, so less land use. Just curious on your views.
Well, space solar power, until the advent of something like Starship, where the cost per ton to orbit drops by orders of magnitude, the cost of getting payload to orbit is so high that there was no possibility of space solar power solving anything, really. Now with Starship, I see a path to Starship cost per ton to orbit being lower than air flight. Like if you were to fly, do a long distance air flight with cargo, like say took a 747 from here to Sydney, Australia or something like that. I think ultimately Starship will be able to do that trip for less cost per ton than an aircraft. So now you've got that opens up a very wide range of possibilities. Like the most obvious one, I think, is actually solar-powered AI satellites. So to move the AI to orbit and essentially deep space over time, because you can actually access over 1 billion times more energy from the sun in deep space than you can on Earth. The scaling, to scale to Kardashev, to make any progress on a Kardashev 2 scale, which is using some non-trivial amount of energy from the sun, you kind of have to do space solar power. Now, you could only beam a tiny amount of that back to Earth, or you would melt Earth. So Earth actually receives a very, very tiny amount of the sun's energy. Earth is a tiny dust mote. You see, like Earth to scale with the sun, we look like a little crumb. So to scale civilization, like I said, to be at all relevant on a Kardashev 2 scale, like to even use 1/1,000,000% of the sun's energy, you really have to use solar power in deep space. And you could beam some of that back to Earth too, but you can only beam a tiny bit of it back, or you'd melt Earth.
And this will be our last question.
We'll do a few more.
Sorry? Sorry.
All right.
Elon, look around you. This is a very, very small sample of Tesla soldiers. Maybe, actually, I should say Elon Musk soldiers.
Well, thank you for your support.
So,
thank you, everyone. I'd just like to say thank you from the bottom of my heart for your support. Thank you. And thank you, everyone out there.
So, I know for sure a lot of them sold the farm to buy Tesla. And they stuck with Tesla through thick and thin, good days and bad days.
Yes.
So my question to you is, how do you feel about repeating the success, but in a safer way, where you get qualified Tesla retail investor only to invest in SpaceX, avoiding all these market manipulators, those crooks, and these short sellers?
Yeah. It is a tough problem that you highlight. I mean, unfortunately, over time, the parasitic load of being a public company has just grown over time. And so you get all these, like, spurious lawsuits, obviously, and they just make it very difficult to operate effectively as a public company. But I do want to try to figure out some way for Tesla shareholders to participate in SpaceX. That would be very cool. I've been giving a lot of thought to how to give people access to SpaceX stock, because I do want supporters to have SpaceX stock, but there's this sort of 2,500 shareholder threshold for, before you become a de facto public company. But I don't know, maybe at some point maybe at some point SpaceX should become a public company, despite all the downsides of being public. All right.
Okay, first of all, thank you very much, Elon. Just an amazing job you're doing, not only for Tesla shareholders, but the humanity in general. So we got a couple of questions many of us are asking. Like, we want to know, many of us think you are one of the most consequential business people on earth ever. And we want to understand, how do you think? Like, for example, like a couple one, how did you know in the master plan part 2, this is like 2018 or something like that, you calculated at that point it takes 6 billion miles of FSD miles driven before maybe the world, the regulatory, would approve it? And then the second is, like, when you were deciding if Tesla's going to have, the hardware chips, AI chips, did you know at that time that at some point when you get to AI5, it's going to be used not only for cars, but for bots and for AI data centers? Like, was that luck a little bit, or was it like you kind of knew that that was going to happen?
Well, generally, in terms of the estimates, like for the self-driving stuff, I generally try to get things to within an order of magnitude. It seemed to me like probably, and this was technically in kilometers, but it would be more closer to 10 billion kilometers, which is roughly 6 billion miles, than it would be to 1 billion. But I thought it would not take 100 billion kilometers. So it was really just in trying to, when you're trying to guess something where there's a lot of uncertainty, just try to get the estimate to the nearest order of magnitude, closest factor of 10, and that's why I said probably around 10 billion kilometers or 6 billion miles. And then, the chip, the reason Tesla created a chip team, and it's important to know, like, the vast majority of, like, Tesla is like a dozen startups in one, and we've only really done one major acquisition, which is Solar City, and then some very small ones. So almost all of this is organic. So I built the chip team from scratch, and the AI team from scratch. It was just because it became a limiting factor. So for hardware 2, we used NVIDIA, but NVIDIA was at that time focused on making really AI server hardware, which obviously was a smart bet. They're currently the most valuable company in the world. And Jensen Huang and his team have done an incredible job at NVIDIA. My hat's off to them. I'm a huge admirer of Jensen and NVIDIA. They've done amazing work. But they didn't want to do a low-cost, power-efficient car computer at the time, AI car computer. So I was like, well, okay, I guess we need to start a chip team to solve that. So then that's when I hired Jim Keller, and we built the chip team, and did AI3, then AI4, and then to be honest, we made some mistakes there with AI5, but now AI5 is back on track, and we'll have a very rapid cadence to AI6 and so forth. And this is really necessary for the car to, like with AI4, I think we can get to 200 or 300% better than human safety, maybe 400% better. But with AI5, I think we can do 1,000% better, or maybe even better than that. Than human safety. So at a certain point, actually, it might be too much intelligence for a car. Because I was thinking, like, what if you get stuck in a car and you have too much intelligence? But then one of the things we could do is, when the car is idle, is use the car as a massive distributed AI inference fleet. So with the consent of customers, we're like, do you want your car to earn money for you while it's sitting in your garage at night? I don't know. We'll pay, $100 a month or $200 a month or whatever the right number is, if you allow Tesla to do AI inference workloads when you're not using your car. So that will also help the AI in the car not get bored. Because I sort of imagine, like, what if I got stuck in a car? And then and the highlight of your day was driving. It's like, but they don't always want to drive. So then what do you do the rest of the time? So I think Tesla could actually end up having the largest. Tesla might end up having the most amount of AI inference compute in the world. Like if you think, like maybe if we had 100 million car fleet, and at some point we may have more than 100 million car fleet, and they'll have AI 6, AI 7, and if you're able to run a kilowatt of inference on 100 million car fleet, now you've got 100 gigawatts of distributed inference with built-in cooling and power electronics and distributed power. So, probably the market's valuing that at 0.0 right now, is my guess. But it seems like an obvious thing to do. If you've got distributed inference AI and you've got the power and the cooling, which is very difficult to do the power and the cooling, and 100 gigawatts is a lot. I mean, the average, as I said, the average power consumption in the U.S. I think is around 460 gigawatts for that's the entire electrical consumption of the U.S. So if you did 100 gigawatts, that would be a pretty big number. But yeah, it's basically something as a limiting factor, and then we take actions to address the limiting factor.
A quick follow-up. Thank you for that very much. A request for you. So you guys just unveiled the Cyber Bear. Looks fantastic.
Oh yeah.
We'd like to. It's beautiful. We'd want you guys, or maybe do a Cyber Bull here in Giga, Texas. My name's Herbert. I've got a Brighter with Herbert channel on YouTube. This is the Cyber Bulls. We are representing the Tesla Bulls, and we stand with you, Elon. But wouldn't it be cool to have a Cyber Bull right here in Texas?
Like a Cyber Longhorn?
Cyber Longhorn.
All right, sure. We'll do a Cyber Longhorn for the factory. All right.
Good afternoon. I'm very excited to ask this question. I've dreamed of giving away a Tesla for a very, very long time. And I finally wore EVJect down enough that they're willing to foot the bill for it. But it turns out to give away a Tesla, I have to have your permission to say we're giving away a Tesla. So it's a simple
just
question.
give it away.
You don't have to do anything. Tesla doesn't have to do. We're going to go through the normal channels. We'll buy it from a store.
Sure.
All that stuff.
You can give away a Tesla. It's totally cool. Yeah. Yeah, but certainly you don't need my permission to give away a car.
Dude, what are these questions, bro?
We'll take like maybe a couple more questions.
What type of nonsense was that?
So,
You need Elon to say you have to give away what?
Hi, Elon.
Like,
my name is Jonathan.
What is this?
You mentioned that the Roadster will have more tech than all the James Bond vehicles combined. Do you think there's any possibility that any of that tech will make it into the current vehicle lineup?
No.
And to follow up on that, do you have any estimate of production or delivery timelines for the Roadster?
I guess, so we're aiming for the product unveiled will be of the Roadster 2, which will be very different from what was shown previously. That demo event will be April 1st of next year. I have some deniability because, like, I could say I was just kidding. But we are actually tentatively aiming for April 1st for this, what I think will be the most exciting, whether it works or not, demo ever of any product. And then I guess production is probably about 12 to 18 months after that. I think production is probably a year or so after that. Oh, well, I can't give away the secrets, but you won't be disappointed. All right, we'll take one last question, I guess.
Hey, Elon.
All right. 3 last questions? Okay.
Hi, Elon.
I'm really excited about this future of sustainable abundance that we're talking about. I mean, you're going to be saving a lot of lives with FSD, but the number of lives that will be saved and improved with this future vision you have is really inspiring and very exciting. So even today, you've mentioned, though, that in a post-scarcity world, the role of money could diminish or become obsolete. Given that much of today's power, including yours, is tied to wealth, do you think achieving this abundance would require powerful people to relinquish their power? And how might we address resistance from those who hold power to make this vision a reality?
Well, I mean, I think actually long-term, the AI is going to be in charge, to be totally frank, not humans. If artificial intelligence vastly exceeds the sum of human intelligence, it is difficult to imagine that any humans will actually be in charge. So we just need to make sure the AI is friendly. Yep.
Thank you.
Was that the question? Go ahead, sure.
Yes. Okay. Sorry, Elon. Okay. Yeah. So I'm Cybercat on X, and I'm doing YouTube and content creator. There's one thing I always heard about Tesla owners or people who want to buy Tesla complain about, that is about super expensive insurance, right? And the thing is, Tesla, I know Tesla also do insurance. However, it's not cover every place. Like based on Boston, I don't have too much options. It's super expensive. And the other point is the FSD is very safe right now. I've been using FSD for about 4 years, right?
Yes.
It's getting to a point, it's like almost unsupervised. However, the insurance still does not take this into consideration. They don't ask you whether you have FSD or not, and they don't know how much you travel with FSD, and that is not a part of the risk prediction kind of thing, right? So I feel like what's your thought about insurance going forward, especially when we're getting close to the autonomy? What is path, like either using your own or with the external partnership? For example, there's a company called Lemonade.
Okay. We do need to not have the questions be super long. I mean, Tesla Insurance is trying to expand as quickly as possible, but the regulatory structure for insurance is extremely complex and works on a state-by-state basis. So it's really somewhat of a racket. The rules for insurance are different with every state. It's a very, very complicated thing. So but I'm aware that insurance often is too expensive and doesn't take the right things into account. So all I can say to that is, yeah, we'll keep expanding Tesla Insurance. When the car is operating as a cybercab, Tesla will simply self-insure, so that kind of solves that. Insurance is a real pain in the neck, for sure. Okay, I do need to end this at some point. I'll take, one question there.
All right, thanks Elon for taking my question. I appreciate it. My question has to do with compute and what the build out or how much is necessary to train Optimus and actually get them to a very household, meaningful robot that can do things, and if the partnership with xAI would help accelerate that.
Yeah, there's a lot of training compute needed for Optimus, because the AI chip in the robot is relatively weak because it's really limited on power. You can make up for that with a lot of training to have a lot of training result in a very efficient AI that can run on a low power chip in the robot. So it is. We will actually have to spend a lot of money on training. Like ultimately it'll be like tens of billions of dollars on training compute. So it's a big number.
Would a partnership with xAI help accelerate that?
Yeah, I think potentially. Yeah, I think that could. yeah, like there's potential for accelerating that. So, yeah, did the XAI investment thing get approved? No? Yes? Okay. Okay, whatever. You know, whenever like it's like you know, Tesla and some other company that I have an interest in, then it's like always quite complicated to you know, do things. It has to go through a lot of hoops to happen. But you know, I do think there's a lot of potential for collaboration with XAI in the future, and with SpaceX. So, all right.
Okay, this is the last one.
Yeah, sorry. Thank you so much. Captain Ali on X, I support you. Thanks you so much for everything you do. Very simple question. I'm from Israel. I don't represent a lot of people, but people do ask me, and I'm going to ask you, any chance to have the app in other languages, like Hebrew, for example? Some people struggle with, you know.
You mean the app is...
The app itself, yeah, just the app, the application.
The app is not in Hebrew?
No.
Oh.
And a lot of people don't speak English, so it's
Oh, okay.
weird.
Shoot, I thought we had it in all languages. Okay, well definitely the app needs to be in all languages. All right. So, all right. Thank you, everyone.
Okay, there you go. We are we're done. That is it. All right, cool. So that was the Tesla shareholder meeting. I didn't know they were actually going to do that much Q&A, but they did. So cool to see. But that is officially done. Tesla stock after hours was going up and down. Didn't really make too much of a crazy move. Basically flat, 445. It was down 3.5% of the day. The entire market was down on the day. In terms of earnings, folks, let's just look at all these stocks after their earnings. Affirm up 13%. Good earnings. They crushed it. Likely deserves to get the move that you are seeing right there. So there is that candle up 13%. Draftkings down 6. NewScale down 4. Airbnb up 4. Archer down 9. Street wanted 400,000 in revenue. They came in at 0, although they did lose less money than expected, which was good. Texas Roadhouse flat. Peloton up 9. Square down 11. Just did not look like good numbers across the board. Soundhound flat. Monster up 3. Iren flat. Trade Desk up 1. MP down 6. Opendoor down 15. Opendoor did a direct offering, but they didn't have a price on it. And there's like dividend warrants for the offering, which I don't fully understand. So I'm going to try to look into it tonight. I think it's kind of bullish, not really bearish, but it's definitely not getting the stock to get that much love. So I got to read into this tonight and see financially what exactly does it mean. SanDisk is up 7%. Yes, that's green. And then AMPX, they had a relatively decent earnings. That stock is up 10% after hours. Amprius, which also didn't do too bad. Overall, folks, it was just an ugly day across the board. I put the red or green poll for tomorrow. 63% of you say green. Tomorrow is Friday, so we are ending out a pretty ugly week. I mean, you had some good moments, but obviously today kind of wrecked a lot of the momentum over the past week. S&P 500 was down 1%, up about 0.19% after hours. I think the simple argument here is if you are a believer in any of the stocks that are down heavy today, whether it's a Robinhood that had an amazing earnings and is down 11%, or whether it's an Archer that's down 10%, you know, this is where you ask yourself, how much do you believe in those companies? Do you want to DCA? Do you want to manage the position? Or do you want to just do nothing and hold and, you know, let them continue to compound if you think everything is going right according to the trajectory of their growth? And that's what earnings are for, right? To reevaluate the thesis. Opendoor right here down 14% after hours. MP's down 7. USAR also kind of took a hit, down 7% as well. In terms of rare earths, I want to show you guys a little bit of the Opendoor call. I didn't get to watch too much of it, and we're not going to watch it, but this is just a little bit of what it looked like. And you can see a little bit of the opening statement from Kaz right here. I mean, I'm gonna listen to it later. I really like that they're doing this on video, and outside of the results themselves, they missed on EPS by 71%. But this is what the call looked like.
Do anything, much less to make our work less toilsome. When I joined the team, I'm not kidding, there were a dozen people whose only job it was to copy and paste information from PDFs into glorified spreadsheets.
So look, regardless of the actual earnings, I really do like that the CEO is staring at you talking on a camera about earnings, especially given that there's so many retail investors inside of the stock. So I hope more of that continues to happen. But that's what you got on Opendoor. Iren, I have not looked through all the earnings. The one thing I will quote right here is Neil, who's saying the earnings are not as good as what people think. And he's saying right here, there would be no net income without $665 million in unrealized gains on financial instruments. And that is the reason they actually put up a profit. They beat EPS by about 1,000%. Now you got a lot of other people saying they're guiding for $3.5 billion of ARR in 2026, which is a very big deal. And it's hard to be bearish with that type of a guide. You do have some other people like Neil, who does own Iren, by the way, saying that, well, the EPS is only there based on some financial engineering. There's not really massive profitability. So I got to go through the earnings. I have not fully gone through it, but I'm going to look through and see what we've got. David, thanks for the super chat. Hi, Amit. I'm in high school spending my lunch money just to hear your thoughts. Okay, David, first of all, if you're actually spending your lunch money, DM me on Twitter and I'll send you back the $10. Please do not spend your lunch money. Lunch is getting expensive, bro. Lunch is getting expensive nowadays. So message me on X. I will Venmo you your $10 back. What do you think about Meta and where do you see it heading in the future? So I spent a lot of time talking about Meta this morning on the Market Open. So I think there's a Meta chapter. You can click on that and listen to it. I'm still trying to do my due diligence. I'll probably talk about it with Steve tonight. I'll be live with Steve at 9:30. So we'll discuss. Maybe Chris will join us. We're going to see. I'll leave Steve's YouTube right here in the chat if anyone wants to join. But look, the thing I talked about this morning is I had a session with a friend who's a very large shareholder of Meta relative to his net worth. He's not like some massive, super wealthy person, but he has been in Meta since $200 and it's his largest position. And he told me that this is not a dip to buy. And so when someone who's been in Meta for a long time tells me this is not a dip to buy, I take it seriously. And his number one reason was because Zuck's is spending with no plan. And the street is justified in taking down the stock regardless of the free cash flow or the net income growth or the overall revenue growth at 26%, which is incredibly impressive because if they're going to keep spending on CapEx and there's not a meaningful way for them to get a return on that, or at least the street doesn't see that meaningful way, then it would behoove people to at least wait another quarter to get a little bit more guidance. Now, maybe by then the stock's already back to the moon and you missed the dip. That's possible. But if you're adjusting for some risk and you're not super convinced, maybe you want to wait and hear some more perspectives. So I don't know, to be honest. Now, here's the thing, dude. Like, is Meta some generational opportunity at 620? I don't know. I think it will. I think a year from now, we probably think, okay, this was a good dip. But, it's not Meta at 88. Right? So if you miss it, like, again, this is all about risk management. If I miss Meta at 620 and it goes to 750, okay, there's other opportunities that are there in the market. But am I going to be like, so upset that I missed? Like, no, not really, dude. Okay, cool. Then you could buy it at 750. Then a lot of the risk is gone. Yeah, you're not getting it at the best price, but you're paying 15% more. But you at least have a lot more clarity to further go on with risk or for further managing this. Google at 140 felt generational. Is Meta Google at 140 right now? I don't know. Even on a multiple basis, it's not exactly. Google was trading at like 14 times. Meta is still at 21 times. So I don't know. I don't think you should overthink it. I think giving yourself some time to kind of navigate it is fine. But if you've been always looking for a Meta entry, then you have your 15% dip. This is the opportunity. The question just becomes, do you want to buy more? By the way, Steve is bullish on Meta, but he's not buying more at these levels. Even today, I think he told me that he's waiting for 550 for him to really get interested. And because he's been in since the IPO. So I have two Meta shareholders right now, Steve and Sebastian, telling me they're not buying the dip. They need to see below 600 to even think of getting interested. And they both are super early, which does, make me think, okay, so why am I getting super excited at 620? No, the reason would be because I don't have a Meta position, right? Which is fair. But nonetheless, I think waiting for the next quarter is not crazy. So those are my thoughts on it. But yeah, in the morning, I spent a lot of time talking about it, and I think you can listen to that there. I'll talk about it with Steve tonight. We'll kind of go through the intellectual thought project and get his thoughts as well. I know Steve is super bullish because he likes the numbers, but I'm curious on Steve's perspective on where does he think the spend is actually going to lead to? Because the street didn't take it down for the tax charge. Like, that's not the reason the street took it down. The street took it down because Zuck's on the call said they're going to keep spending more, and the street doesn't know why he's spending more. Like, they don't see the plan for how they're going to make that make sense. Where for Microsoft, Google, and Amazon, they see the plan. The plan is the cloud, and the cloud is growing dramatically. So it's not because of the tax thing. Like that the algos would have figured that out pretty quickly. I think it's a deeper structural problem. That's why I think the dip has not really been bought yet on Meta. Then again, do you bet against Zucks? I don't know. I wouldn't fully bet against Zucks. So 618 on Meta, obviously below 600 would be very attractive, but got to see if the street actually takes there. So that's what we got. That's what we got on Meta. Tess says there's too many opportunities in this market currently right now. Meta isn't that discounted compared to many other great apps. And that's the other thing. It's like for the Max 7s, Meta's the cheapest, obviously. But the risk you're taking, if you believe that there's not a meaningful plan for an ROI, means that there's other risk-adjusted opportunities that are out there. Which is why I'm saying I don't think it's Google at 140, where it's like, oh my goodness, this is about to double. Like Google literally doubled from, let's call Google at 300, right? It was almost at 300 the other day. 150 to 300 in 4 months. Is Meta going from 600 to 1,200 in 4 months? I don't know. Not with the plan that, or the lack of plan that Zucks has not been able to provide to the street. So those are my thoughts on Meta. Siege, thanks for the $20 super chat. To be fair, Mark Zuckerberg never really had a plan. He just did things and it worked out. Back when they went public, one of the biggest arguments to not buy the stock was that there was no real plan. Yeah, look, that's fair. I just think in the age of AI, if you're going to be spending $100 billion of CapEx, I think investors want to know just like what should they expect from it. For Microsoft, Google, and Amazon, the street knows that much spend is going to go back to the cloud. And all three of those companies have a variety of different initiatives that they're working on. Google with TPU, Amazon with Trainium, Google with Waymo, Microsoft with Copilot. I mean, there's so many different things that they're working on. With Meta, it's like the Vibes app, which I don't think anybody uses, Threads, which is just ads, Instagram, which is ads, WhatsApp ads, and then Facebook with ads. And then maybe glasses, which I don't think you need to spend $100 billion of CapEx to build glasses. Like that seems a bit aggressive. So I don't want to be, I'm not saying I'm bearish on Meta. It's a phenomenal company growing faster than most SaaS companies, right? So it's hard to be bearish on. The question is, do you really want to put your capital here or just give it a little time and wait? And after speaking to a long-term Meta shareholder, I don't think it's crazy to just say, hey, I'm going to wait it out a little bit. I'm going to wait to see, get some more details and then go from there. But who knows? Maybe it rebounds immediately and it is what it is. At this point of the year, I'm also interested in preserving capital as we get to the end of the year. We've all seen how quick money can go up and money can go down. So again, if you're buying the dip, you've really got to be convicted on what you're buying. And you can, like the thing I would hate to do is buy Meta at 620 and then feel bad and sell at 580. It's like, no, if it goes to 580, I have to be convicted enough to buy it again at 580 and just DCA. But if that conviction is not there, then maybe there's other opportunities that are out there. All right, cool. So that's it for me. I got to get out of here again. Thank you all for being here. Iren, I know I'm going to get a lot of shit tomorrow from the Iren shareholders for not streaming the call. But what was I supposed to do? I don't know. Elon would be freaking live at the same exact time. So at least you guys got to see it on Sam's channel. Again, I did not look through the earnings. There's a lot of mixed opinions on Iren. Stock pumped, then it dumped, then it pumped, then it dumped. Again, it's still up 6x for the year. So not making a big move after hours to me is not that crazy. Basically flat after hours, down 12% on the day. Try to go through the numbers, see what we got going on. Opendoor down 14%, Archer down 4% or 10%, Accelerate down 2%, Draftkings down 7%, and then the S&P up a little bit after hours. I bet you did the right thing. It was either Elon or Iren. Like, I mean, I like Iren, but it's like Elon. It's like you gotta listen to Elon. You gotta listen to Elon. Tony, thanks for the super chat. Why haven't you bought the dip in Roblox? It is the future meta. Every kid is on it. I really have not done work on Roblox ever. I know a couple people that really like it, but I just have not done the time, have spent the time to actually look into Roblox in a meaningful way. So yeah, it will require some time for me to go deeper into it. But again, it's just like gaming, all this type of, like, it's never been that interesting to me. So just personally, I've never felt super excited to look into it. Speaking of gaming, Take-Two down 7% because of freaking Grand Theft Auto being delayed. But I will have to look a little deeper into Roblox to see it. By the way, for those that missed it, Elon, $1 trillion compensation package officially approved with 75% of the vote. And that is what you got. What do you think about BM&R? I am going to say the same thing I've said for the past couple of days about BM&R. Obviously, the price action is ugly. Can't do anything about that. You have to ask yourself, how much do you believe in Ethereum and the long-term thesis? And again, if you don't believe in it, then it's a tough hold. If you do believe in it, and if you do think there is this world, I mean, quite literally, the question I asked yesterday to Vlad on that call was a question around tokenization, which is about Ethereum, right? Robinhood is building their layer 2 of tokenization on Ethereum. Remember what Vlad said, it's not just equities, it's everything. Real estate and private credit are the two things that he's the most excited about. That's not going to happen overnight. But when that does happen, you have to ask yourself, over the next 5 years, does that benefit Ethereum as a blockchain the most? And right now, obviously, that's not happening at any scale, and you're getting a little bit of a crypto deleveraging event, which is why Ethereum and Bitcoin have been so ugly. But if that does benefit Ethereum long term, I think that would obviously benefit BitMine. But that's not happening in the short term. So I have not sold a single share of my BM&R. I haven't bought on this dip because I do have a pretty large position. Like I would say my position is built out. So the question just becomes, do I want to be over indexed on it? And like as of now, if Ethereum is going to be as flat as it is, then no, right? There's no like burning desire to get in there. So that's it. You either believe in it or you don't. If you do, you stay. If you don't, then you have to reevaluate how you're thinking of Ethereum long term. Okay, sounds good. But before you leave, can you stay till market open? One day we will do this 24-hour stream. We got close last week with that 9-hour stream. But one day we are going to do it. All right, that's it. I'll be back. Where I'm going to be back? I'm going to be back tomorrow morning. I know we haven't done daily recaps this week, but that's because we've had all these earnings. So quite frankly, I think it's impossible to do daily recaps on earnings season, which is about 3 weeks every 4 months, because like I'm live till like 7, 8 p.m. every day, and there's so many earnings. And so, you're on the market close. That's kind of when we're recapping everything. But we will be getting to the daily recaps again next week. And then I'll be live with Steve tonight at 9:30 on his channel. Chris might join us. We'll talk macro. We'll talk meta. And we'll get into a bunch of topics. BMR's MNAV is not under 1. It's 1.14. 1.14. Also, there's a bunch of screenshots going around saying Tom Lee bought almost like 250 million of ETH this week. We won't know until next week, but it does seem like he is buying the dip. But next week, we're going to know for sure how much he has continued to buy. Also, remember, he hasn't started staking it. So as he continues to stake it, that will generate close to 400 or 500 million of net income per year, and that could be used to buy more Ethereum. By the way, Robinhood did get a bunch of price target upgrades today. So you had Needham 145, Cantor Fitzgerald 155, Craig from Bank of America 166, Dan Dolev 172, Street High, Ed Engel from Compass Point 170, Bernstein 160, KeyBank 155, Piper Sandler 155, Devin Ryan 170, Barclays 162, Deutsche Bank 140, and Goldman Sachs 152. So I do think the Hood dump today was not really based on anything on earnings. I mean, got all these guys upgrading the stock. The macro was ugly. And as a result, Hood being a proxy for a broader bull market, if the market's getting hit, then Hood is getting hit. So that's what we got. All right, that's it. Thank you, everybody. Appreciate you all being here. I know it's been an ugly day today, but we will live to survive another day. We will keep going from there. This was a quick week. This is a very quick week. And we're going to see what we got on Friday. I have like 2 missed calls from my dad. I got to call him back. He's probably wondering what the hell's going on with the market. So I got to play therapist with my dad after this. But thank you, everybody, for being here. Appreciate it. I'll be with Steve tonight at 9:30. We'll talk more markets. You guys saying Trump is live, bro. Trump is not live. He's not live again. I feel like you guys are just saying it to troll, but there's enough of you saying it where I think he's actually live. No, he's not live. Okay, it's just everyone trolling. But I'll be back for the market open tomorrow. And then tonight with Steve. Dude, he called me at 2 p.m., but I was in a meeting, and then he just called me right now, and I'm like, then I'm live. I'm like, all right, I gotta call him. Dude, every time we get on the phone, he's like, so what happened today? I'm like, Dad, it's like it goes up, it goes down. He's like, yeah, but why is it down? And I give him some reasons. He's like, well, and it's like, I'm like, this is what's happening. But it's kind of fun because it's like, it's it's like the stock market allowing us to bond, you know, because it's always good to have if you're able to keep a relationship with your parents. I know as you get older, it's hard. You need something to talk about, right? And the stock market kind of creates that thing for me and my dad, and so that's what we talk about. All right, that's it. Thank you, everybody. I'll be live tonight with Steve, and then tomorrow for the market open. Bye, everybody. Have a good one.